either way, let's get this started. Starting off, futures. Futures running pretty warm this morning. Overall, we're going to be about break even. What's happening? Well, we've got all-time high. We've got all-time high risk, all-time high volume. Risk on, that is. Everyone wants in. Everyone's telling their brokers, their banks, get me in there. People are buying Bitcoin, Dogecoin. People are buying meme stocks. Everyone wants a little taste. People are selling treasuries to go buy equities. People are converting to the dollar. Anyways, let's talk a little bit about coming into the week. Last week, we were big fear buyers. We were already buyers back over here. When this happened on the pullback, we were fear buying. We were taking every chance we could get. We had times when some of these are about 1.5% pullbacks. Russell 2000, we had about a 2%. Right? This move, we were buyers. Coming into this week, there's certainly going to be a lot of FOMO, and we're going to look at individual tickers. There's certainly going to be a lot of FOMO, so I'm guessing that some of that is going to cause some bid. It's going to be pretty wild, right? It's going to be pretty wild. I typed it in the chat. Going to give the reminder again that we buy on fear. We bought down here. We bought here. We buy on fear. Who are we selling to? We're going to be selling on those that are going to be coming in buying now and later, right? We always talk about we get into a position to capture a move. We don't chase it. We sell to the chasers. That's how we make money, right? You got to sell it to somebody. Keep that in mind as we go through the week. There's going to be plenty of times that you're going to need to be taking profit on different positions, right? We're not going to exit our entire portfolios or anything crazy, right? But there's going to be times where you're going to need to make a decision to take the profit, whether that's a transition idea. Now, we've been doing a lot of transitioning, right? This week is going to be no question or no, difference. Excuse me. So let's take a look at some of the pre-market action. We entered a lot of positions on Friday, sort of increased sizing on positions. Some of these are going to be names that you're all familiar with. Most of you are already in these positions. So as we go through them, just keep them in mind in terms of where exactly we are in terms of the position. MP is a good example of one that was basically you couldn't hold on to. We had multiple times. These spreads are these are big spreads, right? Between these candles, over 10% on these high to lows. If you're in this position, then congrats, I guess. It's up 12% pre-market, but that's a pretty difficult one. So again, the moto from the last 2 weeks have been, these most recent breakouts have been extremely bullish, right? Extremely bullish, and they are really the hot tickers that we've been watching. RDHL, we've gone big on healthcare and bios, right? In terms of my tiers, tech is tier 1. In terms of the overall year, healthcare is tech 2 or tier 2. RDHL, I talked a lot about over here right on this break. This is right when we started getting into a lot of the bios from last week. RDHL is one of the big ones, 8.25 this morning. RESN, one of the more recent charts as well. Again, a good example of a chart that you're probably just not going to be able to be into. But again, I want to just show 10.5 here in the morning. Let's keep it going. DPW, don't really need to mention. APHA, again, these charts here, right? These charts here of all these distribution and everything else have continued to put these moves on. Obviously, we captured this move here, a new move coming. So 10.5% so far pre-market. We'll see how that goes. Maybe this is a possibility up here, right? Up in the trend line. FRO, obviously a big position from the end of last week. Now up 8% pre-market. This was up 5.5% on Friday. Another position that, again, all you had to do was follow some simple rules, and these are very straightforward. But again, I wanted to show these positions of these recent breakouts have never, basically, there's never been a time where you did not have a simple yes or no decision. Did I break my level? Yes. Okay, I'm going to be a buyer. Same with the downside. Those charts that we just looked at, did they break down from support? Yes, so I'm not in. Some of them are up, of course, but again, you shouldn't ever be getting hurt on any of these on any of these charts, right? So FRO looking very good. My favorite position from last week, I talked about it quite a bit. Again, I'm going to probably talk about it more. It's up 8.5% pre-market. We entered here on the trend line, transitioned here, rebought on the whip, right? And so now we're about to have another fun time, right? This might be another another Michael Jackson intro opening here one of these times, right? This is an awesome trade in terms of technicals because you're not trading this move like this unless you're using this strategy, right? And a lot of the times you're getting hurt on a move like this because you're either chasing and then you're getting baited on this move, and so you end up selling too low. This is just a good example of doing everything correctly. This QFin trade was awesome. Again, this is one of your 100% winners, right? You look for 100% trade. That one's obvious, right? Continuing, let's go. Let me bring this back. CNX we are looking at for this break here. This is breaking. This can be at 14.17. This is an interesting move. CNX is a great chart to trade. It's very straightforward when the breaks come. So keep that chart in mind. Again, these charts that are tied into energy and everything else, we could just follow the spot crude, the spot natural gas. These things are really easy to follow on a macro sense. PDD, what did we do on Friday? Oh, we bought some more Chinese companies, you're saying, over the weekend? We put risk on Chinese companies over a weekend for how many weeks in a row now? Oh, I don't know, maybe for like the last 3 months or something like that. We put PDD on Friday. What are we at right now? We're at 6.25. We're opening up at 209 or so. Well up here above the local high. All-time high. See you later. That's a great trade. AMC we ended up not putting on because we were not above our level. Now, we could have cheated a little and said that, oh, well, you know what? It's actually, the lows are getting higher. We can do it. And we wanted to put this on as a long position, right? Some of you maybe put that on. AMC's up 6%. It's still certainly a trade that we can take. Again, a part of that meme economy of tickers, but there's no reason why you can't get involved when the technicals are there to do so, right? When we're not basing all the trading off of hype and chasing and we're actually just following some rules. So keep this in mind. LX, obviously a great position from the last 2 weeks. Again, a technical trade that if you're just looking at the chart, right, and it's pretty straightforward, right? It's really straightforward, but this is the kind of chart that is so difficult to trade, right? When you don't have really any understanding of what's going on with the price. A lot of the times, if you're just looking at this, right, you're just looking at these candles, you're having a hard time picking spots, and you actually don't have a good understanding of where you should be transitioning, where are we going, right? It's like driving down a road during like the middle of the night with no lights on, and there's moose running through the street. You hear all kinds of animals. It's scary out there, right? Well, now you get some comfort with some pretty little lines on your chart, right? This was a lot of fun trading this, right? In the last 2 weeks, we had a great transition, and then we entered on this trade that we talked about, all this convergence. But look at all these damn lines in here, right? It's too many lines, man. But understanding that breaking through supply is such a big thing that we understood that these moves, where they were going, what they were attempting to do, and then also knowing that we can push this position as it breaks through now that we have all these buyers here. This is a great position. If you didn't take advantage of this one, this is another one of those, trades that, when we're watching this live and we're going through it, this is, again, where I can tell you I'm doing something. I can show you what we're looking at, what other people are here are also doing. But it just comes down to your own confidence and being able to do something. Can't push the button for you. So a good example of one of those trades that just a really great trade. VFF coming back again, one of our more volatile tickers. This is one of those option chains where you can find the people in this group in there. This is just a volatility sort of nightmare, back and forth. Another new opportunity coming in this week. We'll see how that goes. A pretty trade there always. Let's keep it going. GNMK, another very big trade from last week, right? Healthcare, again, healthcare had a great week last week. We emphasized it 2 weeks ago, getting into bio, and then we really put it on last week. We entered this trade on the break, talked a ton about transitions, right? And here we are up another 5% pre-market. Now, what's important about this is above the trend line. And again, we talk about this when you've now sort of transcended this supply and you've basically got a new chart up there, right? This is where you no longer need to think about much of this price movement because now you're above the supply. None of that, it will matter if it comes back into that supply, but if it's up here, doesn't care, right? Rockets don't care about what's going on Earth when they're in space, right? Something like that. Maybe there's a meme in there. The skills chart coming back down into support, bouncing. We're now at 39.50. There's certainly going to be some opportunities on this chart based on what we've seen so far. Again, some of these newer charts, SPAC-S charts, definitely offer opportunities. We'll see how this goes. And, again, some of these newer charts are still some of the most bullish. I would still consider this a newer chart coming from this year, right? Now, in terms of other charts, we've talked a ton about semiconductors, UMC opening higher. Everything is technically just opening higher in terms of our bullish positions because, again, the demand there's no supply on these charts, so the demand just sort of overtakes it. Of course, I've been super hot on semiconductors. Again, if you're not in these positions, then this is why I talk so much about capturing a move, right? If you're not capturing a move, then yeah, it feels like shit because you feel stupid, right? You feel like I'm sitting here watching these people make money. I already looked at the chart like a week ago. What am I doing? Like, when you look at this chart now and you look at the other semiconductors, and it's hard to take off that I didn't capture this whole move. How am I going to get this trade now? Here's a good example of a chart that you're going to be able to continue trading it, right? There's going to be chances. You're going to be opening up in the channel here. You have support. You just need to follow rules and be careful in the same way that you had to be careful when we entered over here, right? There's not an additional level of risk buying here compared to here. I would say there's more risk buying down here. That's why it's so hard. That's why it's so hard to buy on fear, and you get paid for doing so. That's why you get paid for buying at a low, not just because the value is lower and you're taking, something from a low value to a high value and that's your profit. You're also buying at a point where the fear is at its highest and people are not willing to pay, right? The level of demand here is lower, allowing you to capture that move for when the demand is high, and that's your profit, right? I talk a lot about volatility. Volatility is really what gives profit, right? It's not just, oh yeah, from low to high, right? Yes, that's true, but the reason why if you ask the why question, well, why is it like that? That's because people are scared to buy down here. They see this move and they're not really willing to be getting in, right? And we talk about this a lot. And again, that's what the market was last week, was people are really bad at this. Like over here, right? Let me just turn the watch list off. People are terrible at this. They're just absolutely terrible. This comes in here. We sold all our position. This comes over here and we start buying on this candle on Friday. And then we start to, as the confidence gets built that we are coming out of this and reversing, then we put more and more on, right? We don't go all in immediately. We start to add more and add more. And then as we come into all time, we realize that over here, based on what we know about where the trend is and support, that this move is just some people taking profit near the top because of some obvious, okay, well, let me get this. I made my move. Those people taking profit here are the ones that enter down here, right? They're not the ones that were already in over here. And so we understood that this move here was not the same as this idea. And so we continue to put more on. But people are really bad at, just in general, at being able to push through a situation like that, right? When everything sells at once, people get scared. And those are people selling at a discount. What is that discount coming from? Again, volatility. This is the underlying. You know what happened on options? On options, this move on the underlying, this move that happened on the underlying, right? If we look at the SPY, right? This is about 1%. You go look at the SPY calls on this situation. This is coming much further down, right? This is coming way down into here or so because of speculation, right? People are speculating, oh shit, well, this is actually making a move. And so what happens in this situation? You end up buying here based on what we know, right? And you end up now making a gain that's not equal to this move, no, your move is equal from here to here, right? If you think about it from the underlying perspective, right? Just due to that volatility, because speculators are not just basing it on the actual underlying value, they're basing it on the time it's going to take now to return to whatever that strike price is to get to that break even to then push further in the money, right? And so that's where buying here, again, you got to be able to understand the differences between reversing price and then a buying opportunity, right? And again, it's hard, but you're here, you hear it, you get called out. One of these times I will be wrong, right? But for now, we're doing okay, right? We're doing okay. When I'm wrong, we'll look over it and see what exactly went wrong, right? But we've been pretty sensitive, right? And we're going to be pretty sensitive again this week, and that's why I started this whole stream off by saying, get that take profit hotkey warm, right? Get that button ready, because you're not going to this week be saying, oh, on a pullback, I'll just push through that. I'll be fine. No. That was all of this. Now we understand, hey, we could put 5% on this week. I don't care what it is. We get those SPY 400s paying this week, break even. That's not the point. That could come very quickly, and then we need to then understand, okay, well, that next move, I know when it's coming, right? That next move is violent. The moves are violent this way and violent that way, right? This was a violent move. It happens quickly, and then we're done, right? It's not going to be like a bear market where you're sitting in it for a month and you have like 2 weeks to make a decision. No, you're in calls. I know most of you are in like you're in like March calls that expire in a month, and you've still got like 10% to break even, right? That type of shit, those you still hold in SPY 400s, those of you that didn't sell SPY 400s are a good example, right? We buy SPY 400s way back here, and you still haven't taken profit on it, and you probably have February monthlies, right? You're a good example, those of you that are in that position of just, I got no idea what you're doing, but you think it's funny, so, or that something's wrong because your position's not up, right? If you got SPY 400s over here, there was no reason why you were still in that position over here. But anyways, not to beat a dead horse, but let's go over to the dollar. Dollar, obviously, we've talked about being risk on, and then this move here being risk on for value. Over here, we've talked about it. The dollar breaking back out is not the same as the dollar breaking out here when this was risk on, right? The market over here was on a pullback. Over here, the market's at all-time high. If this is going up, it's not so much, oh yeah, now people are converting to the dollar and want to buy U.S. equities. Maybe a little bit, but we're gonna take this a little bit more seriously if price starts to break through these levels, and we look at it as maybe a little bit of safe haven, right? A little bit of safe haven if it's in conjunction with volatility rising and equities coming down, right? So in terms of volatility, again, we've talked about it, very subdued, probably not a good example of where volatility really is, right? Now, that doesn't mean you should go sit in a long position on volatility. That's ridiculous. That doesn't even make sense. You don't sit in long vol. That's not how it works. We understand, though, in conjunction with the macros that we watch and with equities, that when some of that risk idea comes through, right, we put a position on, and if it starts to pay off, then we push it, right, and we look for these spikes. Again, this is going to pop off again. It will, right? Oh, by the way, here comes the windbreakers, if you can hear them again. Apparently, there's been some crazy stuff going on in this building, so the windbreakers back. Anyway, this move, I want to talk about it. If volatility does pop, again this week, and it's in conjunction with the dollar moving and then some sort of equity pullback, we're not going to just treat it as like a fear buy opportunity this week, right? So I want to put that on sort of maybe emphasize it a little bit more than this week over here, because this opportunity we saw as a buying opportunity. This over here will be a take profit opportunity. So I just want to put that into perspective, because again, it's not always the same every week, and that's where the idea of it depends comes from, because it depends. Sometimes one of these signals is a buy signal, and sometimes it's a sell signal. But if you go watch some random YouTube video from some kid that he just started trading, greasy finger mobile trader, he might tell you that, well, listen, I use these indicators, and this means buy and this means sell, and that's why you should do it. When in reality, it could be either one. It could be a buy signal, it could be a sell signal, depending on the day, right? And that's where we need to understand and look at everything, right? You have to look at everything. And so keep that in mind, that this week we're not going to screw around. I will mention Bitcoin, since it is important at this point. Bitcoin has hit 50,000. Now, for those of you that may be new and weren't here back last year, we bought on the Bitcoin dip. And over here, early in the early 2020, I called for 100,000 on Bitcoin. Got a lot of funny reactions, a lot of memers. The memers always come out when you say something. When Bitcoin was under 10,000 and you call for 100,000 on Bitcoin, people laugh, right? Well, we're halfway there, and for anyone that entered under 10,000, you now have 5x'd, 6x'd, possibly 7x'd to your position, and it's a lot funnier now to laugh at those people, right? So everyone, you go ahead and laugh at those people. Maybe you are one of the doubters. Guess what? We're laughing at you, buddy. So again, putting on this, I just want to mention it in terms of portfolio as well, because again, we talk about this a lot. Over here is where I put on my full position. So again, this is about 10% of my portfolio. And so I don't trade it. I just have left it. I don't look at it. I mean, other than understanding the chart as it is now, because again, there's a lot of institutions playing the game. We want to understand the flows. Take a look at this move. Again, this is the log chart. I have it on the log chart right now. These trend lines are sort of the three different predictions and projections of sort of the velocity at which Bitcoin's going to move. Again, this is a log chart. This would be March 15th. If it reached 100,000 on this trajectory that it's been on, that would be March 15th. The midpoint is about July. Halfway through July, it would be 100,000 if it was on this trajectory. It's a little bit in between right now, right? It wants to get back on this. A lot of you are still looking at this chart and are like, there's no way. Look at the move. You're like, there's no way it's going to get up to 100,000. What it's going to be is I can't believe it got there so quick, right? That's what it's going to be. I talked about last year Bitcoin coming to 100,000 at this point, right? Over here, which is by the end of this year in 2021, I was talking about having it be at 100,000 based on supply and demand. This has basically taken off at a different level, and that's why we're looking at the chart more, is because institutions have now put in so much money. We've had Tesla just last week talk about it. That's not so much pushing price. We do understand that they are somewhere within either this candle here or it's this candle here that they put on that position. And so we have some sort of understanding of what happens when you get a big block order like that going through. This candle here was about 20%. I think we chalked it up to about 10, 12% was the 1.5 they put in if we're sort of trying to find that order, right? So we're going to start to use those numbers and understand, okay, based on that idea that, okay, this is going to be maybe a lot quicker than we thought, right? And so why does that matter? Because even though this is going to just continue to appreciate and it's not like 100,000 and that's it, I'm not going to sit in a position and act like, okay, I didn't just 10x my position, right? You 10x a position, you're going to probably take profit, right? I'm going to probably take profit. Let's just be honest, right? That's like take a vacation for the next like 5 years sort of profit. So let's just be honest, right? So those of you in also a major position, we're not gonna screw around and like it's blowing past 100,000 right now. Let me just keep pushing or like it's going to zero. These type of things we're not gonna screw around. So just keep in mind that we're getting more and more sensitive over there. The moves are getting a lot more violent, and again, we're not gonna. You're right or you're wrong, and so far we're correct, but as soon as we're wrong, we're going to get out of it, right? Keep that in mind. We got 3 minutes to the market open. Again, be prepared. Be prepared. So if you had an extra day to prepare, to get your tickers into your broker, get your watch list ready, to look at the positions that you may want to now enter, to have your transition points ready, you've only got 3 minutes now. So if you just woke up, well, good luck. Some of us took quite some time. I really utilized that day off. It does help. Does help. Let's see, did anything change up here? Top of the list changed a little bit. Let's take off the extended hours. Let's get prepared. Shorten this up a little for you guys. And we'll see. In terms of this week, everything is the same from last week. If you don't know what that means that clean energy, the semiconductors, these sort of sectors that we've been continuously watching are sort of the hot ticket items. The overall is still value through the idea of retracement, through some of the smaller caps. These ideas are still in place. So again, you've listened to me say it 100 times. I don't need to say it more, I hope. Value is going to lead the way. It's only when volatility starts to spike that the mega caps and that tech side really starts to become sort of in demand. But remember that some of those intermediate tech companies are great opportunities, and we actually look through them in a different lens of value. Again, EVs took a sort of a drop last week. These will be buy opportunities at some point, but we need to see confirmation, right? I'm not going to go buy Tesla down there or something until there's a breakout. So keep those ideas in mind. Again, I'm not going to, you can tell sort of the difference between what I've already said. We're in position. If you didn't already capture and get into positions, I'm not going to tell you to be buying shit this morning, right? That doesn't make sense. You need to see how this open starts and then go from there. So again, those of you looking for me, what do I buy this morning? Other than, I know Ecto's movement, but for those of you that are like, actually, well, I didn't do anything the last 2 weeks, I'm not telling you to buy shit this morning. If there's opportunities there on charts I've already posted that are breakouts, take them. Follow the rules. Otherwise, continue what I've already said from the last 2 weeks. I'm not going to sit here and call out tickers and shit, right? You're late. You haven't been paying attention. Let's see what we get here. Again, the moves are going to be, this is not like, again, this morning is not going to be rocket science. You're going to go, oh, right. I've seen that candle before. Like, what do you guys think these first 3 candles are going to look like? It's probably happened at least, I don't know, 1 million times by now. Great coffee this morning. So again, we're going to be sensitive with volatility and understand what volatility means this week. I do, maybe at close we'll talk about a little bit. I do want to start talking a little bit about how some of this bid is might lead into volatility creeping a little bit more. There's been so much shorting of volatility as just a strategy since 2008 that, again, that's why the spot VIX looks lower than it really is. With so much risk on, like actual investors telling their portfolio managers to increase risk on their positions, everyone sort of wants to be risk on. That can cause volatility to rise. And we want to make sure not to get spooked by volatility, right? Sort of like what people naturally thought of options where, oh, options are getting more volatile and risky. That must mean people are hedging. We know that's the exact opposite in this market. Everyone's buying options because they're speculating the upside and more. So, there's a few things we're going to think about, maybe talk about a little bit, but I'm not going to do it this morning and during market hours. See, pretty nice start here. Let me bring you over to the Qs. A little bit of a wider spread. Obviously, mega caps are far behind. Here's value. This is not exactly on the trend line. Let me show you. You can see this spread right here. Let me just show you this spread here. Is about 1%. It's about 1% between there. We'll see what this looks like. Again, this is one of those situations. We talk about it. That trend line there, if it's above that trend line, see you later. We're talking serious points. So we're still sort of within it, right? I sort of have called this trend line a bit of a zone because it really is acting like a zone. No one is thinking that as prices in here that it doesn't have chances. I think everyone expects a run. So keep that in mind. We'll see how this, again, this is making, following our rules very, very precisely here with the trend line into here again. Think about what has happened before. Again, understanding that we're using this trend line as a zone. It's a bit of a zone. Let me show you the SPY. Okay, in terms of positions, there's the top of the list, DPW, MYO. McKees' OCGN continues. IMAX, again, we don't really talk about news here. You can read the news on your own. You guys saw IMAX in China with some big moves on the Hang Seng. I've told you guys to start looking at that a bit more. Showed you the chart, talked about it a lot more. Again, if you saw anything from last night and yesterday, IMAX China putting the big numbers on, who would have thought that it would react similarly? Probably because of the same thing, right? MP continues. RESN, SPSW has always been fun. HYLN continues. Again, skills, talked about skills. PDD continues. Fake Neo, PRTS, MJ. What did we do? What did we do with pot stocks last week? Did anything change with pot stocks? Yeah, they took profit. Did anything change? Anything change at all with pot stocks? No. So what did we do when it pulled back and we took profit near the top? We bought more. We bought more. Why? Because it's fear buying. Some of you are going, oh no. Some of you are going, oh no. I'm going to miss it again. And you're going to watch price all week. You're going to watch price all week. And then at the end of the week, you're going to go, oh, okay, now I'll buy more. Just like you did over here. If you could have captured the move with the rest of us. Some of you held. That's whatever. But if you then can't see this idea, understanding that this is just a take profit move and that you got to just sort of remove some of the emotional ideas of this move and just look at it as, okay, price rallied, took profit, continues. Did anything change? No. It's hard, but you have to remove this idea in here. You have to look at this. Yeah, I don't know. We just talked about it on Friday. Whatever. But pot stocks are moving. That's the point. And C-Trader gives out the winning call. Do we need to talk about the win? Let's take a look. Whoa. What's going on here? Something about winning. Apparently it's not loading. There it goes. Look at that spread. What is it? Oh, that's why. Because it's like, TradingView is probably like, I don't understand this spread here. An interesting start. What did we do last week? We put travel on, right? Do I need to talk about travel again this morning? You guys want me to talk about it? I can, every morning, I'll go through every single thing that we've already talked about, recap it, because you didn't take the time to, if you weren't here, look at what we did, or if you were here, you just weren't listening, right? I can go over it every day. Obviously, we put travel on. Joking aside, we put travel on. We talked a lot about this move and why travel is such a great play, why it has been a great play. Look at airlines, right? What did we do on Friday? We put airlines back on. We captured a 42% move on American Airlines. You're damn right we're going to do it again. So we put the position on, understanding that it's a pullback into support. Look where it is right now, up 3%. What do we do with Save? We captured this entire move, transitioned, right? But we transitioned by taking profit on the trend line, buying on Friday, and look where we are now, up 2%. Whether these pull back or not, it doesn't matter, right? You're getting confirmation of the idea, and again, we're looking for further upside. Whether today starts off slower or not, that's not, it doesn't have anything to do with the profit potential of this week, right? When you think about this idea, you know that your potential is way past this trend line now, right? It's significantly further. What do we do with Death Bout? Oh, do you guys remember how we bought on the support over here? And now look where we are, right? These kind of things, see the confirmation you're getting, and now some of you are like, damn, it feels good that, I made that choice, because again, it's just following simple rules. We just follow simple rules, and it does feel a little, like Wiz likes to say, silly. It feels silly that you could have just made this move like everybody else, right? It's a very simple, it is extremely simple. You don't even need to do some crazy option plays. You just buy straight up calls, right? You could buy any of them. You don't even need to get deep into what should I be buying here and how should I play this based on, should I hedge it? You don't need to do any of that, right? We keep it simple, right? Keep it simple. So those travel moves are great moves. It's great confirmation. And again, we're not going to stop doing what works, right? We're not going to stop. Fake Neo is up 8%. This is probably a notable position to mention. This isn't the first time we traded it. We traded it over here, if you guys remember. I don't know why the chart's not. Anyway, I must have deleted it when I did this one, but we had this consolidation. We traded this breakout and obviously took this move here. Fake Neo looks like it's making its move, right? It's a great position. It's a great position. EBON continues. Again, the usuals. I take you through DPW, Craig. Again, some of these moves. Sava, we're going to keep an eye on. Keep an eye on. HYLN, in terms of this position, again, I think Brian or something mentioned that this is getting like Reddit hype into it now. Keep that in mind, that like you take this breakout, possibly you took profit here. I wouldn't, if you're not in a position, I wouldn't go get in there now if Reddit's jumping on it and shit like that, right? We got our profit, that's it. Leave it. TWOU, obviously we're already in. I haven't seen anyone get excited in chat yet, so I'm guessing no one else is in this position. But again, there's like no excuse. There's almost no excuse on this chart based on what we've talked about. Yeah. I mean, I know some people aren't it, but I'm not gonna. We don't need to all gloat together. But just like I just want to emphasize, like, even though I know the trade day is going on right now, but if you're not getting this kind of move, this is exactly what we use our strategy and method for, right? Because you have other people that are looking at shit and looking for news and all kinds of different things. All you had to see was that you broke out. That's all you had to look at. Like so many people are looking for dumb hype things, and like I don't like some of these tickers that are getting posted. Like I don't know what these tickers are. I don't care, right? Just because everyone on Reddit wants to go buy hype and you see it pop up on your mobile Robinhood app and it says this is the highest traded ticker. Like who gives a shit when you every single day can find consistent breakout plays and trade them? Like again, I think some of it, I don't know. Yeah, McKees is typing up all the. I'm gonna ignore McKees with his silly plays. We all know McKees has got them greasy fingers looking at Robinhood app, swiping through. It's popping up on his screen. Oh, do you want to buy the SOS? Don't be baited. We go for consistency here, folks. This is not the roulette table. This is the job. Let's see. Zoom is going to be interesting this week. Now, in terms of, again, obviously this, I'm not going to keep saying it, but this move is, of course, giving confirmation of what we've already talked about. We talked big about how now that this breakout has occurred, that it actually took a little while. It took a little while for everyone else to see the move, right? We drew this chart intraday. Not everyone saw it. It took like 2 weeks for people to figure it out. But again, capturing this move, I just want to emphasize sort of the difference in terms of speculation, right? This move, if you were able to we first tried to capture it over here. If you were able to capture from this move and understand that above this trend line, that this was going to happen, right? It was going to happen. This is where you're coming up probably this week, right? You're going to come into resistance. It's going to get very crowded. I said that word last week. It's going to get very crowded. Very crowded. If you're not in a position that, again, this is where you had to be willing to buy further out of the money and understand that you need a position that you can push further and further, right? I talked a lot about that because it's hard to transition on. You come into resistance, it's not like you're going to be taking profit there if it's going to continue, right? So yes, you can add more always, but why didn't you add more over here, right? These kind of ideas. We'll see how this goes. And I don't know about movement. It's so difficult to gauge what the demand on this chart because it'll come back and you might get some news events. No windbreakers, please. This type of idea, we'll see what happens, right? TME, of course, again, one of my favorite trades here. Capturing this move, I talked about it a lot. Turning a marginal trade into a massive sort of exponential trade is ridiculous. So again, that's making its move. Something similar, right? I do want to mention X. Of course, we took the X trade. Even got a little toasty. It hasn't moved yet. It's now on a trend line in a horizontal over here. There's so much supply over here from the converging here. This is a break. This is a break by virtue of horizontal. We'll see. OSTK continues. And we've been sitting in this position and laughing really since over here because this is a position, and I'm going to talk about right now again, that no one is even like seeing still. And it's trending because there's almost only pros on it, right? It's like a consistent sort of no retail sort of trading. I'm not really sure where retail is here, but it's not retail movement. There might be in there. And Tiger Shark, since you're in here, buddy, I know that you are in over here, and I talk about it a lot on the stream that just because you sold something doesn't mean you can't re-enter it. If you're still saying it kills you and you're just watching price, I talk a lot about price watching. Stop watching price and just do something, right? Over here, when you're like, oh shit, I missed this 20%, you can't tell yourself, oh, well, I missed it. And then go, oh, I missed it again. I missed this 30%. Oh, I missed this 20%. You got to stop watching price and just go do it, right? I mean, it doesn't matter if you bought here or here. You're still up 100% on the underlying and 100% every week on the options, right? So, again, even people over here, if you're just sitting here and you're not in this position, then what are you doing? Trading dumbass tickers still, right? Stop. Just stop. When there's obvious plays to be made out there, again, this chart, it's never lied to us. This chart, since I posted it, has only gone up on the weekly. It's on the trajectory and everything. If anyone wants to look at this chart and act like this has not been the most obvious thing in the world, you're crazy. You're absolutely out of your mind. Oh, again, that does not work. But in terms of a trend line, again, it's pretty damn straightforward. It's pretty damn straightforward. It's actually a little bit more vertical than that. It's the same trend line, but you can't copy on a log chart, unfortunately. But again, stop watching price. Get involved. Z continues. Obviously, the same thing goes for Z. Those of you that watch me pull up this chart every single day, price watching is not going to help you. It's not going to help you. You have to get involved. I posted this last year. This was our first sort of community trade. Those of you that were here like a year ago, it was our first community trade back over here when I still was doing the silly little charts where I only posted the target like this. It wasn't very pretty. This was a weekly chart. Posted 167 to 190, and everyone was like, dude, the price is $50. What are you talking about? We're now at $200 on the time frame. Is your buddy still in Zoom monthlies? No. Everyone upgraded their position. And again, if I'm putting risk on for, as you say, buddies, then I make sure that shit's not getting blown up. No, I mean, again, you can't be sitting, like I talked about a lot, you can't be taking a short-term trade on Zoom, right? How many times in the last 2 weeks have I talked about not taking a short-term trade on Zoom? Because you need to be able to push further, right? You don't cut your legs off. I've said that line probably more than any other line the last 2 weeks. Don't cut your legs off, right? Don't cut your legs off. Imagine just buying February monthlies over here, and now your time's up this week. It ends this week. Ends on Friday. You're already expiring. You can't be trading that close to expiration. It's like SPY 400. Those are shit contracts right now, right? You have to be pushing your expirations out, and that's why those of you that lost money last week, it's because your expiration's too short and you're too far out of the money, right? This move if you had even just at the money, but you had February monthlies, this move killed your contracts. Absolutely killed it. You have to have longer expirations and not be 10 to 20% out of the money. That's ridiculous. You don't have any intrinsic value ever. They're not going to be worth a dime. They're not worth anything to anybody, right? Just because people are like propping up the price on out of the monies doesn't mean they're worth anything. They're not. Even though people don't exercise options, there's the option to exercise them that gives them their value. If there's not the option to exercise them because they're not in the money and don't have intrinsic value, then they're worth zero. They're worth zero. So those of you still buying short-term out-of-the-money contracts and are wondering why you make 20% for every 1% move, but then you lose 100% for every 0.002% move on the underlying, right? You lose all your value from a tiny little red candle. That's because the contracts are worth nothing to begin with, right? You're trading junk. You can trade junk, but you need to understand you're in the junk trading business, right? So far, we're just trading flat, right? We're just trading flat, and people are waiting to digest the move. 10 o'clock, we'll see what the big boys thinks when the institutions come out. I think you're probably going to see a little bit of take profit from the big boys. I think there's probably some areas where they're going to transition a little bit. This tech move, right, we saw from Friday, from last week, right? This move over here was institutions looking to get something that has some liquidity. You look at some of these charts, they're really far behind. I don't know why TradingView is lagging here, but let's see if it come. These charts are really far behind, right? When you think of when we do the in quotations value, again, it's not like a blanket statement that covers specific tickers. It is sort of made up of a lot of different components at different times. You're almost getting mega caps into a situation where they've been consolidating for so long that there's almost some value there, right? There actually is some value there if these are so bearish for so long that, you look at these charts and you're like, well, I mean, maybe there's a chance that institutions might want to buy those, right? We bought Amazon on Friday, right? And I talked about it. I'm like, this chart's been consolidating for months. It's broke out, but it's been consolidating for months. And it just keeps consolidating each of these moves, these trend lines that keep getting placed, right? But every time it breaks out of the trend line, it makes another move. When you look at this, you don't need a very large move. This is almost turned into a marginal trade where even 1% on the underlying on the contracts is giving you quite the exponential, because there's not many believers in these mega caps anymore, because everyone's just all in value. We're all in value, right? But we need to also be making some trades that are going to offer a little bit of chances, right? And especially if volatility comes at some point, this is where people want to go. We capture moves, right? We're not going to chase them. We don't need someone else to tell us what tickers are getting hype and what's the most talked about social media ticker. If you want to be that trader, you're in the wrong spot, right? You're in the wrong spot. You can make money doing that. You're not going to be consistent though. You're going to be on the Vegas floor. Let's see what we got here. Let's see. Again, healthcare continues doing very well. I mean, in terms of surprises, we haven't had any surprises yet. Healthcare continues from last week. Again, a lot of the ideas we're getting confirmation on. That's our first thing with our checklist. Are we getting confirmation of what we've done from before? We are so far. I think really what we're now looking for is when does the transition come on those, and where is that going? I think you are going to see some of this. These mega caps and tech is going to get some of that action. It just based on what you see here from an institution, right? You're working at an institution. You're a trader. Your boss is probably telling you, listen, guys. And first of all, as a trader, you don't listen to your boss because you're the trader. He doesn't know anything. So he's telling you though that listen, the corporate guys, they want to get some good earnings this quarter. So make sure to take those profits. Don't put anything too long on. Don't put anything too long on, right? We want to get those gains right now. Take profit, get on to the next trade. Where's the next one? Well, it's probably over here. You can probably get a tech jump real quick and get a shit ton of liquidity. So from an institution perspective and the way I would think about it, I'd be like, okay, if I'm going to get a bonus, if they're going to pay me $100,000 bonus for, every million extra that I go over sort of my required amount, then okay, I'll tell you what, I'll go buy some tech right now. So that's where I would put my money. And again, it's because you have liquidity. You have enough liquidity to go do that. And if everyone on the street's thinking the same way, then, well, there you go. So that's where sort of the Zoom thing comes in. Who's over here? Who is over here? We see this happen, right? And then it takes like 2 weeks. And then you know what the street does? Institution traders and, the people at, wherever they are, right? Those traders start to look over here and they go, you know what? I could probably go prop this up. Let me go ask one of my buddies. Let me throw out a rumor email that says that Zoom's getting added to the S&P, from an anonymous email. Wow, so ominous, right? And you do that sort of thing, and now people are buying it. Is this retail? Maybe a little bit, but that's not who's pushing the price, right? So these sort of tech ideas, I think you're going to get a little bit, right? You're going to get a little bit. Light, of course, we're ready for this move, right? I think this is going to be one of those very straightforward trades. You're just going to have a candle develop there, and it's a yes or no trade. It's a yes or no trade. Okay. Let me see here. DocuSign continues again. This chart I've talked about since over here. I don't want to post the chart. I'm hoping we get the short term. Maybe I can post it now. I've said this for the last 2 weeks. I've got the long-term diamond, but it's over 200 days of candles. I'm not going to post the chart like that because it's not a good idea. But we've been sitting in this trade, keep pushing it. This sort of trade is going to keep putting points on. The idea that I have is that I can just wait for an upside breakout, or I can wait for an ascending continuation triangle and then post the chart. So those of you that have known that I've been talking about this for 2 weeks, obviously capturing this move is great, but it's not the full move, so it's okay. So But I do want to mention that that does continue. Upwork obviously continues. Very nice trade. LBTYK is something that we look for quite a bit. These very dangerous candles in here. Again, death boat, guys. Here's your new opportunity on that 2175. Please. All right. JJR mentioned CCL resistance. This move, first of all, you got to be taking that trade there. But you've got this resistance you could have bought on. This resistance you can be bought on. If this candle develops into something like up to 25 here, you're going to want to commit Sudoku, right? You're going to feel dumb. Don't feel dumb. You're not dumb. You're all smart, beautiful people. All you got to do is take, you mobile traders, get them greasy fingers, lick the ketchup off, and hit the buy button. Let it pull back. Let it do whatever it needs to do, but you've gotta be able to hit the button when it's in your face, right? Too many charts in your face. Too many charts in your face. Okay. Let's see. Okay, how we doing on EVs? Let's brew the EV dilemmas. No movement there. NEO getting the China boost is certainly something we obviously keep in mind. The next trade that we're taking is on top of this resistance here. So again, we're not buying on unless it came down into support down here. But EVs, I saw Nikola and shit like that getting some. So retail, maybe this pulls into here. We're gonna wait on those. In terms of our new EVs, Ford, GM, obviously over this weekend, if you guys didn't see, we've over the last few months obviously known that everyone's getting into EVs. Ford, GM being sort of the first. Other major companies, Toyota's now coming out with them. Everyone's going EV, right? It's going to continue. It's not a fucking surprise, right? We've been trading these because of the EV. We started taking this trade over here because they're now considered EVs, right? And there's so much future growth idea there, which is, again, it's not growth in the same way we talk about. It's really a value idea because there's a ton of value. So again, anyone that calls me not a value investor, that's true. I'm not a value investor, right? I'm not Benjamin Graham finding fundamental ideas that are value. No, I'm trading on the same idea, though, just through a technical understanding because I could time it a lot better, right? I'm not going to sit in a position for fucking 2 years and then get paid. I'll just wait until the technical opportunity breaks for the value idea as well, right? I'm not trading this because I don't know, I'm not making shit up. This is we have a breakout. Oh, and I'm considering this an EV now, and there's a lot of future value, right? And so it's the same idea, but I'm not trading just on the concept. I'm trading based on the chart, right? And so keep those, I say it a lot, but I just want to make sure you guys, the difference between what I'm saying there, right? Is that there's value. There is value in this because they're going to need to make a lot of goddamn EVs. That's a lot of future value, right? Whether it's in earnings or not, that's where the demand comes from. And you can understand that, right? You can understand these things and see it in the price, right? You see it in the price. I don't need you guys to tell me that there's some news event over here. I can see it. I can see it in the freaking price, right? When we're watching the market, we can see when there's an event. I don't need to know what it specifically is. I know how to look at it in the price, right? And that's a lot quicker, and you're not going to be able to beat an algo news trading, right? No point. 90% of all volume in the market's algos. 90% are algos. 90. You are a 10%er. Unless you're trading on IB and you have your shit on algos too. Which again, I have a video coming out for. So that's coming. Maybe tonight. We'll see if it's tonight. All right, what's next? What's next in terms of transitioning everything yet? Not yet. Certainly not yet. We keep pushing. So here's what I want to see here. Now it's 10 o'clock, right? I want to see something like this. This, if I'm a trader, right, at an institution, at a fund, then I'm buying this right now. I've seen the opening action. I've seen where our trajectory is. I'm buying this right now. If I don't see that, then I'm going to start to form a little bit of an opinion on where, not just where, but when the flows are coming in for some of these things, and specifically what sectors, right? We want to see what this week sort of has in store. This should be getting that. Like if I don't see that, then maybe I'm going to question a little bit of how much belief there is in further value, the value trades, right? These charts that are retracing and are tied to the economy. So, yeah. So again, you can see that candle start to pop off there. I know some of you like that. You guys get like, ooh, wow, how does he do it? I'm gloating and joking, but obviously as a big fat candle develops in here as I say it. Again, that's because you're at a desk. You're trading at a desk. Where am I going to put my money right now? Well, there you go. Why do you think? Again, this is where everyone thinks in a very similar way, and you can use that understanding to a significant advantage, right? Those of you that haven't worked at an institution, well, you guys sit in here every damn day and trade with me. You're a prop trader. You're in all technical terms a prop trader. Like actually, you're actually a proprietor. You're sort of, considering that you pay me, you're technically a proprietary trader of me. Legally, you're a proprietary trader. And so maybe, yeah. Who was it, Matt? I think you wanted me to claim you on taxes. Yeah, maybe I could. On the business side, probably could. I could probably claim you guys as some sort of write-off. And by the way, as you've seen, since last year, or this year, I have not complained about taxes this year at all. See? But that's the benefit of paying quarterly. I don't have to pay one big paycheck or one big check. Okay, we're trading flat here. Let's go take a look at the megas. Looking a little bit more elevated. I do want to. So again, this is the most obvious move here. This is where the question comes in. This is where the big question comes in. Are we coming this way? Are we coming down here? Again, take profit or not. It's going to be, you need more this week. The big thing is treasuries. So much is being sold from treasuries. Yields are rising so much in treasuries, right? Because of the selling of treasuries to come buy equities right now. A lot of these things, when you are forming a portfolio and you're now actively selling treasuries, you need to transition that into a longer term position. So that's why you come into these things that are more tied to the economy, the reinflation idea, the idea that, okay, the economy is going to be coming back, but that's going to take some time, right? These sort of trades are longer term, which are very similar to treasuries, where you're going to be in that trade for a while, right? But that's also where, well, shit, what am I going to believe? What's going to do very well by the end of the year? In 2 years, tech is going to still continue, right? And so that's where some of these ideas, that this idea was very short-term even though it's a long-term idea because the value came quick. What did we talk about on those charts? It's going to happen quick, right? They're going to come back quick. And that's what they did, right? This move happens very fast. Just like over here, the first time we tried it, it happens very fast, right? That retracement idea happens very quick. And so it's not so much a long-term trade when you're expecting it to happen really quicker than other people might believe. You know, so again, these moves, just keep some of these ideas in mind as we go forward, you know, when you're just sort of contemplating things. I'm going to bring it back over here to banks real quick, talk about it. I'm not going to, you know, obviously over here I talked about it. You can't miss this move, right? And if you miss it, then you're just not, it's like the not paying attention thing. Again, over here, I then talked about it again, that this is that's your chance buying on fear, especially on the call side. The options on banks, right? Or if you go through the ETF, this is technically a marginal trade. And so when this pulls back a little bit, it does quite the number on the options, and so you're getting a good price. You've got to be taking advantage of this sort of opportunity. We talked a lot about this sort of V move and what will happen when it breaks this high. If this puts a significant amount of points on, then you just keep watching. In like a week, you're going to say the same thing you said over here, right, about this move. So just want to keep this in mind because these are slow-moving trades, right? It's like the XLE trade. Did I not talk about this enough, right? These kind of trades are very easy to make, right? These are just marginal trades. It barely moves. If it's making a break, it's making a break. It's not going to lie to you, right? There's no way to lie to you on this chart, right? If this is turning, it's turning. If it's going up, it's going up. It will tell you when it's going to change direction, right? So again, if you weren't able to get this trade, this is a long-term trade, right? This is the reinflation and economic recovery trade, right? Just like value that we've been doing. This is the true value, that there's value in this. If you're not making this kind of trade, again, or at least if you're not making some of those other, maybe it's like, I don't know, more technical and a little bit harder difficulty, timing's a little bit harder, these are your marginal sort of lower difficulty trades. It's an ETF. It's longer term. You can get away with buying April's at the monies and in getting, value every day, right? And you're never getting hurt on that. Brian says Facebook's leading. I probably believe him. Because look at this chart. Not leading, but it's certainly not doing terrible today. But yeah, there's a lot of, again, this is the most terrible chart. You can always get away with shorting Facebook. Or really the best thing to do on this chart, it's the same as shorting, but you're not buying puts, you sell calls, right? Imagine selling calls anywhere on this chart. You're honestly making a killing. If you're selling above the resistance, so if you're selling calls, right, you should be selling calls at a strike above resistance. Look how easy it is on this chart, right? You have a lot of different areas to choose from, maybe all-time high, bring it down to here even, sort of in the 285 area, right? These sort of things, and you just sell calls above that, and everyone that buys them, they never are worth anything, and you just make money. That's what actually holds this type of chart down, is that it's just too obvious. But anyway, we are getting some points on this space, and I know the charts look similar. I will mention, of course, that Microsoft has been the most bullish. When it comes down to it, right? You know the bullish chart. You know the difference between this chart and Facebook's chart or Apple's chart, right? It's just strikingly different. And so if there's a place to go, it's in the bullish charts, right? Google with its move here, right? Did we not just talk about this, right? Did we not just talk about this move over here? Let me do it on the L, right? So these kind of moves are a little bit more straightforward. Okay, let me see, how can I form this discussion here? Okay, PayPal, right? We've taken this trade. We've talked about the transition here. If you're in new contracts here, or if you just picked up on this support bounce, right? We're treating this as a new chart from this sort of the candles up here, right? And due to the fact that we understand that there's this sort of technical trend idea of trading up into the new channel over here, based on if this is a new chart above this, we're not thinking about this, that it wants to trade up into the channel here. Now, in terms of short-term patterns, this would be a bearish candle. If this ended right here, I would say the next candle is going to pull back into support here, right? So keep this in mind as we see this candle form, whether or not it's continuing or not, and especially if you took your profit from this move, right? You entered over here. If you took profit from this candle here, or if you took it on this candle here, you need to now think about your position from this point And this would be your first bearish candle, and so now you need to maybe change your timeline if it's not pushing up here, right? Because again, it's most likely going to pull into here if the candle ended right there. Just a hanging man, right? Just a hanging man. But I mean, this chart is super bullish. I'm just talking about timing. Understand if you haven't already transitioned that this candle, you're waiting until tomorrow to buy now, right? Keep that in mind. And everything looking good. I saw Baba mention, hasn't moved yet, so didn't really mention it. Still waiting. Chinese tickers are doing very, very well though. We did talk about the Bud chart. It's virtue of dates. It pushed out from the break. We will see. We will see what this move develops into. Possibilities here. Certainly possibilities here. The Yum chart continues again. The silly term. Silly term. And so we're going to see. Twitter, of course, we've been extremely bullish on. We transitioned here. We're pushing it up. It's very similar to the PayPal chart, but the difference is that this has maintained its bullishness, right? It's maintained its trend. We're, of course, looking to trade back up into this channel here from the prior consolidation. Let me zoom back. Prior consolidation here. Again, if you miss this trade, then, I mean, I'm not going to say it happens. Sure, that's obvious, but you have new chances. When I talk about transitions, I'm talking about transitions for those of us that are in the position, right? So you entered over here, and we transitioned here, which means we're taking profit on this move and now buying a new position. That means those of you that are not in position can now buy a position as well. It's the same idea. You're buying on support. You're buying on a breakout, right? It's the same idea. So again, the whole price watching thing, certainly if you're still feeling that way, get out of it. Get out of it. Our favorite, this is our meme ticker, of course, SeaWorld, the C's chart from this entry. We're looking for the new. We're looking for the new breakout, the classic, the classic move like this, right? The classic. Don't know if I want that trade or not. We did talk about the SIBO chart, but nah, I don't know about that one. So small caps are in their first intraday consolidation. This is going to give us, of course, you've got the pullback. You start to consolidate, so you're either looking for a breakout or breakdown, right? As price starts to tighten in here, it's only 10:15. Still got about an hour of active trading coming through. We'll see. We'll see what this move turns into. Again, certainly rotation based. Everything we've seen so far, but no outflow. That's the important note. That's the important note here, is that nothing has outflowed. There's no flows from equities to somewhere else, right? I would say there's like a net inflow still. When you look at the overall, again, from close to today, there's still an inflow. So unless that changes here, right, then we keep it going. But again, I mean, think about this, guys, right? There should be an expected take profit. There should be an expected take profit from just a historical view of, oh, Green Friday, and then we take profit on Monday, right? Even just from that concept. But it really should be from the concept of from here to here, we usually return about, this was a buy candle, even though it's not the largest candle. When we talk about these candles that are sort of an event candles, sell event or buy event. We talk about the retracement factor where price wants to consolidate some of that move. It's a very similar situation here, right? You're going to get a take profit in rotations going across the market as it figures out this move. Again, warm up the take profit button, right? When you look at these, this is where, again, where I talk about the institution side is that they're looking through this and, again, are, of course, just looking at the liquidity side and saying, okay, well, I can just, honestly, this chart is, first of all, this chart doesn't make sense on it from their point of view because they're seeing the NASDAQ, right? If you look at this, let me take it off this as we're sort of going through this. When you look at this NASDAQ chart, right, again, I'm looking at the Qs, but just the Qs are so heavily favored in the mega cap side, which makes it even more of a point. Look at this chart, and then let's go take a look at the biggest and baddest boy of all. Look at the Apple chart, right? In relation, we're not even above the September high, right? But you go back and look at that chart, and this has continued to push past. And this again, that's the high that you just saw. It's significantly higher, and so when you think about the relation here, this is over 10% higher, right? It's over 11. In relation, it technically shouldn't be this way, right? It technically shouldn't be this way, and so of course there's some understanding on the institution side that they can continue to. They have built a massive position in these. We know for sure that they've got massive long positions in here, and the only thing they haven't done is buy more. They've just sat in the position, and so whatever the reason is, it doesn't really matter. It's just the fact that, of course, there is future value here. It just hasn't sprung itself yet, and so that's why they're not even moving. Here, give me one sec, guys. All right, we are back. We're back. See, eBay mentioned, I'll start going through tickers. You guys have mentioned eBay with the rejection trend line horizontal, still well above the trend line here. Of course, this is a very bullish position. A lot of similarities between what we've seen on PayPal, on sort of the Twitter move, the Etsy move. I would say, you mentioned Peloton as well. Peloton, obviously, I've mentioned it wasn't going to break that trend line, right? Wasn't going to break the trend line. I had the trend line down in here. I put it out here with this move here, but of course we talked about the trend line that these prices were on. I talked about it's not going to break it. It's not going to break it, and that's an opportunity. And of course on Friday we got the break, so we took the break entry. We talked a lot about this resistance in here, right? We talked a lot about the sort of horizontal resistance and that we had to wait for it. This move, think about it. It's going to continue towards the upside, right? It's going to continue, right? Based on everything we know, it's of course reacting to an event, right? This is sort of a buy event here. See no reason why. See no reason why this isn't going to put a significant move on it. It's the same premise of what we've talked about before. A very bullish ticker. It's consolidated. It's going to continue its breakout, right? We've traded this so many times, right? And it's been different. There's been different reasons every time, right? From last year when we were trading it back in here, a lot of it just had to do with the fact that, of course, COVID winners became a thing due to not knowing when COVID would be over. Now we're in the we don't care about COVID mode, right? And it's sort of reacting to, of course, many other different ideas, but purely technical, I would say. And so now we can really trust in our trends, which is why over here you knew and you could take a little bit of risk, but we were waiting for the breakout and we got it. And certainly very nice chart. Mention MP again. MP continues. Again, I mean, I would say that the biggest reason why you miss this kind of trade is you're afraid of when gap ups happen and you feel like you missed something, right? And you feel like you're chasing, or there might be some sort of like argument you're going over with yourself about gaps. A lot of it is just removing maybe some ideas that you have about gaps. Maybe like your gap fill religion or something like that. I mean, it did make its pullback, but obviously not to the tune of maybe what you're looking for. But I mean, we'll see how this continues. We'll see how maybe you get another chance. Of course, we took the FSR pullback on Friday. Those of you remember this trade. So we opened, we saw the gap up, and we waited for the pullback. We bought intraday. Take a look at this move here. Talked about it. I said 22. We're at 20 and a half. It's up 20% from there. Again, that's a trade. You have to be willing to take a trade like that. And even if you don't take in sort of this context, which is what I used for the context of the trade, even if you don't take this in and you just look at it from over here, I mean, you have to be able to make some of these. You're not talking like putting a significant position on, right? And only putting a small position on, but you have to make these trades consistently, right? You gotta make these trades consistently, and you make 100 of these trades, well, then you're going to get your 100% average, right? If you only make one of these trades and then your other trades are making 10%, well, then, of course, your averages sucks, right? Or you're losing on your other trades, well, of course. Or if you put all in on a trade like this, more times than not, you're not winning in that position, right? So that's why we keep things smaller, and we make a lot of these trades. Make a lot of them. MWK continues. We, of course, have talked a lot about this position, but just to continue to show the move on the trend line, we keep it going. CCJ is another really good one to mention, really. I think when you think about channels and the way that price trades on a trend, it wants to be in this channel, right? Wants to be in that channel. A good example of that. LX, of course, continuing. Now, this is not the best candle. I don't see it finishing like that, but again, not the best candle, and so you take that into consideration there as we go further towards close. Let me go through some of these tickers. JJR mentions AMKR. Very bullish move, 22.5 we talked about last week. This kind of chart, again, is what is driving this? Well, we know the sector, right? We know the sector, and we went through all the semiconductors last week and talked about this sector is hot. These charts are going to be on different schedules until at one point converging to one another, right? So this move really started to get going when everything else started converging, which is like a good example is NVIDIA, right? This move happened and then the rest wanted to converge and make that move, right? And so again, semiconductors besides AMD, right? Besides AMD, and we knew that this is the bearish one. What have we done? We've avoided putting capital towards AMD and we put it elsewhere. Why? Well, opportunity cost alone tells us not to be in this chart. It tells us to be in those others, right? At first, it was UMC and TSM. I just want to show this because, again, you could say, well, you said to get into semiconductors, and I've been sitting in AMD for a year now, and it hasn't done anything. It's like, well, no, because you haven't paid attention. We've put in terms of opportunity cost that UMC here, right, has been the most bullish out of all of them on the American side, and then TSM on our foreign sort of standpoint being the biggest supplier. And we knew that this is opportunity cost. We were going to be in these two charts. Only now have we gotten the NVIDIA trade from the breakout, right? Only now, and we talked about how much of a mess it was in here. This was a mess and a nightmare, and you couldn't trade it. This was when we were trading AMD, and then we were looking for NVIDIA. It's only now that we've gotten the trade. AMD was our semi-trade. It was our semi-trade, and now it's doing the NVIDIA dance where guess what? It's going to make a move, and it will converge with the others, but it's not until it makes a breakout, and it will be clear. And guess what? We bought on this, right? We bought on this, and it didn't end up working, but we didn't lose anything, right? And we weren't in the position for a long time to take away from other gains elsewhere, right? And that's where semiconductors are it's so important to understand opportunity costs, not to have capital sort of just sitting and waiting, right? I think this chart, you need to get the break again. The TTCF. Of course, the light trade. Venki mentions light. Again, one of those charts, it's not going to kid you. It's not going to lie to you. Obviously, it's made the break, and it made the break Friday, but let's take a look. Let's take a look. See the difference? Was there... Okay. A little bit of a difference. A little bit of a difference, guys. But that light chart, we certainly want to get a part of when we can. When we can. And that was on the break. People buying the Zoom 520s for $226, says Brian. That sounds like some retail madness. And it sounds like a very small amount of money. So it's probably not even... It's probably a very tiny amount. It just looks like a lot because they cost 2 cents. How much do they cost? Anyway. Market wide. There you go, guys. I think I emphasized that enough, but this buying that came in. Now, on the solar side, let's bring this up. Nova sitting at that resistance. In terms of this move, we talked about it from down here. This, of course, you're looking for the break. Bring it over to some of the big boys. SunPower continues on the trend line. That will make itself known, right? That'll make itself known. I think if you look at sort of what's happening on the ETF front, you're getting further flows. So all of them should continue, of course. retail stores, of course, I mean, as a sector, as we're calling it, retail stores, which comes from a lot of losing in COVID by so much, we consider them value, right? We consider them value even though they're significantly higher than most of them, than their all-time, or from their high in February, right? These moves we continue to talk about. We continue to talk about them, and they've been continuing to perform, right? CrowdStrike, this trade over here continues, right? These sort of things, these are like an intuitive, on a technical front, we know as soon as these break that the trend will continue, right? We know that price consolidates, breaks out, consolidates, breaks out, and doesn't stop. It doesn't stop making that move. That's how price works. And so, again, finding these moves should be straightforward. We're getting confirmation. CCEP, interesting. Again, this is just KO, but KO with a different schedule, right? But it doesn't matter. We trade technically. It's like the cuck chart, right? Here's cuck, which is just, by the way, just a much better name than CCL. Cuck. You have to love cuck. Here's the cuck chart, and here's the CCL chart. The difference is the difference between marginal trading and not. The cuck chart is a little bit more marginal, where you get a higher exponential on the move, on the options, right? There are times when you want to know, well, you should know the difference, but there are times when you do want to trade one or the other. If you're making these moves, we chose the CCL chart, but you can obviously see the difference between the underlying value itself that's coming from the option side, right? Yep. So again, SQ continues again. We're pushing this position. This is a good example of one that you're not transitioning here because you don't have any levels, right? You can't go say, oh, I'm done. I'm gonna take my profit right here. That's the end. It's the top. Nope. You push this until it reverses, right? So what's a reversal? Well, let's say you entered on this candle here, right? You entered this candle here, you're up 15%. Reversal would be halfway through there, right? Would be about halfway through. Or if you had, let's say, 2 daily pullback candles where you had a candle here, you've got a candle that pulls back, and then the second candle, the second daily candle opens, selling to the downside, you sell immediately from the open, right? Sell immediately from the open. Red candle, you then are watching that second daily candle to see if it's going to open to the downside or not, and you take profit. Or you go full reversal only. The full reversal front only if you have a long-term position, but this would be like a March monthly. You would take profit from the 2 candles. If you have, let's say, April's and further, then you would be pushing until it was a full reversal, right? CRNT is certainly screwing around over here. In terms of this move, this is so volatile that you have to go on like a daily approach. You can't go look at this chart intraday and say you have any clue. Right. You need like dailies and certainly bouncing, but take that from a daily approach. LSU says Elon needs a tweet about Tesla. I don't know, buddy. Opportunity costs. Make that money work for you. You want to be in Tesla, or do you want to be on one of these charts that's going up? That squaring chart we just looked at. Do you want to be in Tesla, or do you want to be in this one? If I ask you, do you want to make 100% this week, or do you want to make minus 10%? Which one do you want? Do you want to make nothing, or do you want to make money? That's where the money question comes in. Do you want to work? You know, got to work for that money. Where do I go? Let me tell you about this great service that is provided here. There's these charts that I post. Let me tell you a little bit about these charts, okay? I post a chart, and then the price goes up. That's basically the gist of it. Or it's at least a plan. It's at least a plan, right? See this MP chart? There was never any doubt. It was just a matter of when. This, you can make 250% on the options. You can make 100% on the options. This QFIN trade, you could have made 300% on the options in 1 week. TME, this move is already 100%. HYLN, even on the underlying, you would have done okay. Sava, you would have done okay. There's quite a few, I'm not going to go through them, but PDD, this move from here, this will be 100% trade from the weekend. That will be 100% trade from the weekend on the options, from just a little bit of risk over the weekend. NWK, that's 100% on the options in a week. Fake Neo, that will likely, this is a very marginal trade. I would say that's probably going to be pretty easy trade. FRO is probably a good example. This up here, those of you that are in this position, this is where you're questioning whether or not you're transitioning or not. Or you should already have an answer to that, but this is probably liquid enough that you're going to be able to push that position. It's holding out the supply here. We'll see what this does. This is not a situation where you need to get out of this position and then look to buy on the top, right? This is not a big enough move that you're like, wow, let me take the profit here. No. This is more of a zone, right? Up here, sure. Up here, sure, because you're not exactly certain of the move up there. Tech looking very good. SPY, the Qs, certainly the rotate. I mean, again, that what I talked about from this open of sort of the big boys where they want to go. Certainly getting confirmation. We got confirmation of that idea at least. We'll see how that continues. We'll see how they hold through launch, whether it's a little bit of baiting or not. Certainly, I mean, of course, there's certainly some baiting. I mean, correction will come. It's just how much do you bid up before then? I'm sure there's some ideas already floating around of, okay, let's push tech up, let's ride tech towards the upside, and then take profit on our other positions, and then we'll be in the position that's going to benefit from volatility. People will want to transfer to tech, and then we can take profit there as well, and then make the next move and cause the next breakout. These sort of things. Certainly in the minds. Death Boat. Death Boat is certainly giving signs that, like we've done with win. When we're winning, we go to the win. The Death Boat might mean we might be getting on a Death Boat here pretty soon. I mean, when I say soon, I mean maybe in the next few years when COVID's over. Maybe a vaccine-only boat. However that works. I mean, I would rather just go, if I'm going to go to warm weather, I'd rather just go to warm weather on an island, stay there at a place, not get on a ship with like 5,000 other people. But maybe it'll be fun. MKR continues. I really wish there was, obviously today weren't many alerts just guiding through the market because we're already in position. But there's been a ton of alerts over the last 2 weeks that are doing well. So when we talk about if only there was only if only there was, indication of what to buy and when, that would be very helpful. Really wish there was more alerts. Really wish I knew that this RDHL chart would be doing well. I really wish this QFIN chart that this guy won't shut up about. I knew. This TME chart, really wish I knew. I should have watched $27 here. And also, members in chat mentioned it. FSR, this pullback here on Friday, really wish that guy told me to buy there. PDD, MWK. I really wish I knew to watch this chart. If there was only a way. CCJ, I wish I knew that I could buy on that support still. I only wish this guy would have drawn a few more lines on this chart. I only wish he would have drawn more lines and told me more. If only he told me. If there was a way that I could just for $80 a month pay to somebody to make a few grand. Must be at least 50 lines. What chart do we have the most? Probably Tiva. Does Tiva have the most lines? Tiva's gotta have the most, right? I think in terms of capturing this move, and capturing this move, this obvious move over here that we took, we entered the trend line, took profit on the move. This is setting up into a really nice, what's so funny is that I'm going to have to keep the lines on the chart. Because this is forming a new consolidation that's different than these ones, but they're still all active because it's active in the trend line. So I'm going to have to, if this is a wedge and we're going to have to re-enter it, then I'm going to have to keep the fucking lines on the chart. Sorry, guys. I know it's disgusting. But it's so clear because we've captured, those of you that are wondering, like, we've captured each one of these breakouts, but the consolidations are really important to understand still in the way that it's accumulating towards the upside. So this breakout here, understanding it, this breakout here, right? This is now turning into a very violent consolidation, but we've talked about this as these charts continue. What's happening is that they've gone in, the reason why I keep the patterns on the chart, and I'll most likely delete them if we put a new one here, but the reason why I like to still think about these patterns is that we've been doing this as a market as a whole, is we get these very clear breakouts from consolidations. And I've talked about how the moves that are coming now in the market are violent. We're instantaneously pricing a new point, and we're not consolidating the same way. We're instantly getting there. This move is just going to whip, right? And we've talked about this a lot, where a lot of these charts, they're not consolidating the move the same way. They're doing this, right? These sort of instant pricing, and it's really important to see that difference. And that's, something that we need to adapt to, because otherwise, if we're waiting for very traditional consolidations to happen and then to capture the breakout, since at that point we understand what's happening, we're going to miss a lot, right? And it's important to see that. And I think I've given a lot of good examples of this. Something like the EH chart, even though it's very close to a traditional consolidation, a lot of the times we just have a trend line break, right? It's just a trend line break, and then you capture, right? Like, I really wish this guy would give me a chance here. This is a 74% move. That's 74%. It doesn't look like it on the candles. It doesn't look like it on the chart, but guess what it is? And so this is just a move that you just need to know that you're breaking a trend. That's it. You just buy it, right? And so this kind of thing, we've really adapted and have now been capturing these kind of moves that come from not just only classic sort of patterns that we can see and understand, but from price movement that's purely just breaking. And we understand it from, okay, there's a trend line there. If it breaks that, I'm a buyer, right? And you follow that rule, and you keep everything simple, right? Keep everything simple. I don't need to know what other people that know less than we do are trading and doing, because they don't know more. So those of you that are still trying to find out what other people are doing and trying to get shortcuts like that, you're basically just admitting that you suck as well. So stop. So yeah, I love this chart a lot. In terms of this move, again, we had a lot of questions about this whip here, and we did a ton of fear buying. And I know there's somebody in here that bought that dip from fear buying, but this move, these are big spreads. These are big spreads. This is tightening. That signals to me that this is a bullish consolidation, almost like a. It's really not. You could get into like an ascending continuation sort of triangle idea, but this is more of like a bottom wedge, right? What you're going to probably get here, see this tightening? This is a consolidation that's happening towards the upside. But what you're probably getting in here, let me do this just intraday here. What you're probably getting in here is a move like this, right? You're getting a move like this, and it's going to form some sort of continuation, right? Whether it's here, and this is the candle there, right? Whether that's the candle there or not, and then it's breaking through, right? It could be as simple as that. Could be as simple as that. I'm guessing there's more. There's going to be more to it than this. There's going to be more to it than this. This is not just the start, right? It could be a little bit further here. Could be in line with this here, right? Could be in line with that there. Maybe it looks a little bit more like this. Anyone remember the charts, most recent charts that I have that look like this? Anybody remember the tickers? That are extremely bullish. They're consolidating and tightening within the move, but they're extremely bullish towards the upside, right? I don't like to draw patterns and act like that's what price is going to do until there's a clear breakout. But just to give you an idea of maybe what's forming here, because again, this is certainly tightening from these moves, and that means you're going to make a larger move one way or the other. Which way is more likely? The upside, of course. The upside, of course. So keep that in mind. Again, most recent charts are the most bullish. These charts, so those of you wondering, really wish this guy would give me some chances. I'm going to give you a good example here, the QRVO chart. I post the chart. Here's this move, this breakout move. Post this flag. Here's the breakout move. Post this chart with the continuation diamond. Here's this move forming. Again, we use a very, using the system same way every time. But again, going through the most recent charts just as the market sort of hanging out here. Fake Neo, of course, a great trade there. These are the charts from the 11th. The light chart, of course, has been mentioned. We're waiting for a clear break. I've talked about, I want this to be a yes or no trade, sort of like these candles in here. So these candles are just tightening, sort of forming that tightening pattern before you make the move. The Unum chart, how many times have I said it, that these big healthcare companies are going to be it's really the tier 2 this year of value, or really price movement. At the end of the year, you're going to see tech is leading, and then these healthcare companies are going to be the second biggest movers on the year, I would say. This Unum chart, this is a tank, right? And I talk about it as marginal trades, where these are not big candles, but for every point move on the underlying, you're making significant points on the options, right? With zero risk on these charts, right? Almost no risk, because there's not much There's not much on the speculation side. So again, this is you look at those charts that are making like 20% moves on the underlying. This is a very similar to that on the options, right? In terms of what you're going to get, this is 100%. I should say no. It is 100% trade. So keep that in mind. Again, I've talked about finance, REITs, banks, REITs, right? REITs are big charts. So again, looking at the most recent tickers that I've posted, these are just the charts from Friday. Obviously, a lot of these are big breakouts that you're waiting for more, so you haven't seen them. Chewy, of course, that big trade from last week, is just making it a historical sort of take profit move compared to the buy event, right? 9%, it's only lost 2%. That's nothing, right? So this move we keep pushing, right? We keep pushing. Let's bring it back to the 10th. FRO I've already talked about. This move here that we captured, we're going to keep pushing that. SWCH, of course, broke down. We never broke out through resistance, never able to take that trade. GPRE is the chart that I was talking about, this bottom wedge, right? This bottom wedge, this consolidation to the upside. This breakout is the most clear-cut trade. When this opened up, we opened above, and that was the yes or no trade. Did it open higher? Yes. Did it open above resistance? Yes. Buy. That was it, right? If you're not able to get these really sort of straightforward trades, you're not going to be able to trade the more difficult ones, right? So keep that in mind. CVE, of course, taking the trade from the trend line there, breaking through. Again, I talked about this being tied with the spot crude idea there as well, of course. Over here on the 9th, this was the, first of all, the open trade that's continuing today. But these were the open trades, right? This open trade that we swung up to the trend line. These sort of moves, when we talk about tempo, of course, now you're losing a tempo, but understand that you're still above this here, so everything is still in play. You're likely going to continue back, so we're waiting for that next move here. I think JWS is a good example as well. You're just waiting for this resistance to break now. You're likely in this position. Some of you are likely in this position from this candle here because you're still up, so keep that in mind. DFEN, what are we waiting for? Waiting for that resistance break. Guess what's happening? You're getting this classic sort of tightening in here, that pennant idea. That move is going to be violent, right? Maybe it swings back down here. That doesn't mean forget about this chart. Short-term memory, if this swings back down here, well, that's a buy opportunity. We're looking for the breakout. Anthem, same idea as Unum, right? Might be a little behind, but guess what? It's still above this trend line, so it's still active. This idea is still active. This is a trade you're going to, if you forget about it, you're going to miss it. This is a tank. This is the tank. It's a marginal trade. For every 1% on the underlying, you're making a significant amount on the options, right? So it doesn't need to look pretty yet. It's going to look good later, right? Yeah, Ecto saying fuck Anthem was just because of his work. So those of you don't sleep on those charts. EURN, right, was a fun trade from Friday, right? We waited for the break, it broke, and we got it, right? And now look where you are. You're in the middle of nowhere, having a great time. Cocktails on the beach. Dish, support, waiting for the break, right? But all these charts are still looking very good from the most recent. And a lot of these that have taken profit are from the move that's already happened, right? The move that's already happened. Urban, right? These retail stores are taking profit because they've made such big moves already, right? And we're looking for that continued approach. But I mean, I'm a big fan of BLD. Okay, BLDP is a good example. This chart in the trend line right now, I talked about it from last week, that of course you get a breakdown and it turns a bullish pattern into a bearish one. This over here though, trading on the trend line, you could very quickly turn this chart back into this. And again, what happens here? We see this a lot where you don't get confirmation of the move, right? What's happening? Extend this out, right? Extend this out. And now you have a situation where this is turning into, move this out of the way, this is turning into a little bit steeper, right? It gets a little bit steeper in here, and this move becomes something else, right? Becomes something else towards the upside. This is like these channel charts. I'm trying to remember real quick. Let me just look. These channel charts that are trending towards the upside. I'm not talking about the SPY being that. We have those charts that turn into breakouts, into consolidations that start to trend in this like channel, this upwards channel. It doesn't really need to be a pattern or anything. It's just swinging back and forth between support and resistance in a channel, and it just keeps trading towards the upside, right? A lot of times we see that. I'm going to talk a little bit about this move. See this? We've had the tightening, and now we're getting broadening. All right, we're getting broadening. We're going to need to see what these trend lines turn into. You know, this sort of idea both ways, right? What do we turn it into? Going to need some sort of direction. top of the list. Same characters out there. That YY chart up 7.5. All right, what do we got going on in here? Let's see. Still figuring out how to manage this trade. We keep going. Okay, let me mention this because I mentioned DFEN, right, the ETF. These are charts that are of the same sector, right? This is the exact same sectors that DFEN trades. So again, these charts have continued, right? And we've been talking about these and trading these. As these come up here, maybe as these reach their supply, then maybe all of them start to converge. But these moves are being made. So when we keep, we have a lot of charts that are very similar here. We're just looking, right? We're waiting for a bit of convergence. Time is it? It's 11 o'clock. Bios again. We'll continue our sort of theme from last week of these moves. What we're doing is we're not looking to push these in the same way. What we're doing is we're using a bit more of, it's also sort of that convergence idea. The bio sector itself is swapping demand back and forth. So we capture a move like this, right? And now what we're looking to do is we're ready to take this profit, even on something that may not be a full reversal, to then go put it into another bio that's breaking out, to continue that sort of short-term risk-oriented trading and going from sort of hopping in one position to another. These are big moves, right? However you're capturing this, a lot of these options, you go look at the volatility graphs, the volatility charts on some of these for the ones that, when we're trading the options, some of those are like disturbing to look at. The volatility as it moves away from where the price is currently gets into like the 100, 200, 300% IV marks. And you're talking about price just moving. As it moves and makes those at the money contracts, they are now at the lowest point of volatility, which could still be like 150%. I talked about a little bit last night in the chat, but those kind of situations where you're buying at the money on some of these, and then now it's this is where it is not only on the underlying, but that's where it was in terms of, let me draw it, in terms of the volatility chart, right? So this is what the volatility chart looked like at, let's say 4.5 over here. You were at the bottom of volatility at the 4.5 mark, but as the strikes went out towards this way, let's say the $7 strikes over here, the volatility goes up to like 300% or something, and the same with the in the money. The in the money over here is at like 300% volatility. So as this moved, now this is at a point where now it's coming in from, you bought here at the low of volatility, now it's actually at the left tail of volatility. So the price is not only increased on the underlying, but now since it's, and I'm using this not just for this ticker, but any ticker, now that it's in the money, now it's at the top of its volatility mark, where the at the monies are now over here, right? But it's at the top of its volatility, so it got the underlying move. And if it started at 100% IV, now it's at 300% IV. And so you've got sort of a double whammy there of premium, which is again where you're getting your gains from your options, is that volatility. You're buying hopefully at a lower point of volatility to then get the premium from the higher volatility, right? Not specifically this chart, just talking about in general. The ones that look like this. TDW continues. RDHL. What am I waiting for? silver. Let's see. Again, that YY chart is, see ya. How we going? Douyu continues again. These Chinese companies that we've continued to put on, we'll continue to put on. Death Boat, of course, continuing. You know, in terms of the travel move, again, those of you that took this trade as well, great job. Again, there's not, this is where we look to capture moves. We capture these moves. Even these airlines just holding value where it is important to note. Even though you get a doji here, it's important to note where it is and that it's not moving comparatively, right? Comparatively to here, the average. Now, this is whipping between the trend lines, right? This is exactly what you want. You come into support, confirm support, melt up during, again, this is Friday. We open significantly higher, right? So we're still above. We're green on the day. We're green on the day everywhere. So keep that in mind. That when you look at this, this is not bearish or something, right? We're still up. Maybe not from where we started. I know Blink was mentioned earlier, but now I'll mention it over here. This is what I was thinking about, that other chart that I was talking about, where you do have like a breakout, but it's trading in this sort of channel like this, where you have to turn your head a little, and it's just support and resistance, right? Price is just trading in between support and resistance. We talk about this, that just trading to the upside. It's consolidates, breaks out, consolidates, breaks out, consolidates, breaks out, possibly? Question mark. Again, tied into the EV sort of dilemma right now. Clean energy EVs are very bullish, but EVs where they stand still waiting, right? You're not going to sit in a position that's consolidating, right? You need to trade these on the breakouts. So next time you can trade this, right, is a breakout through the trend line, which is converging with all the supply in here. There's a ton of supply in here. There's no reason to be a buyer below, unless it was down here in the trend line, which again is to be expected. It's to be, I mean, at this point, you get this consolidation and you break down from it, then you're going to come into the trend line. That's most likely, right? So we're a buyer down here or on a break. Now, you do have this converging. You have the trend line and then the supply here. Again, this could be a little bit broader, possibly. Could be a little bit broader out here. But converging supply, we talk about a lot. The likelihood of this break happening here or the trend line are the most likely. Those are certainly the most likely situations, which would present a pretty high level of volatility. So I would say the options right now are sort of, I mean, they're going to be at some of their highest, the highest volatility based on there's a lot of supply down here and there's a lot of supply up here and you're stuck between the two of them, right? People are speculating a big move one way or the other. They're not expecting no price movement. It's fucking Tesla, right? There's people bag holding from forever ago. ZM flagging intraday. I mean, listen, if you're not already in this position, then you're picking up on daily ideas. I mean, in terms of whether it's flagging or something intraday, again, I don't know what it's doing there. When you're buying here, you're not buying for a short-term reason, right? It's the same situation still. So if you're looking to buy for longer term here, you want to push this. Your plan here is to buy at some point if you're not already in, and if you're in position, you're looking to push it for like a month or something, right? You actually want to push this position for like a month, maybe a couple weeks, few weeks, and then continue a position with new contracts or something, right? Transitioning. And so when you're buying, you don't care what the next candle is. You don't care where the price is at lunch. In terms of picking up like the most perfect buy opportunity, well, again, we know that the best time to buy is on some sort of level. You're not at a level, so in terms of being a buyer on a long-term schedule, you want to be buying on a support. So for price to come down in here into support, Or you already know and you don't care and you'll just buy whenever because you're buying for a long-term schedule. But again, this is where you should have been a buyer on support. You should have been a buyer on the trend line, break, support, buy. There's like 5 different times you could have bought. Now trying to buy up here in open space is exactly why we capture moves in the first place. Because in terms of where you buy here, well, you're looking at intraday candles and going, well, I don't know where to buy now. I don't know where to buy. Well, because there isn't a true area to buy. There's no such thing as, oh, okay, well, let's just act like this is the only day it's traded. Yeah, we got some support in here. We're tightening. This tightening could just come back down into here. So you don't know for sure that you can buy here. You don't know for sure that you can buy on the break because that close it could pull back. This is why we trade where the levels are. There are no levels here. If you're not in this position, you should have bought at open. What do we talk about? Buy at open. Trade in the first 30 minutes. If you're now just looking to trade here, that means you woke up too late. Because if you weren't already in this position and you knew from in here that we're all in this position and looking to trade it, then you'd be buying from open, right? If you're now looking to buy here, that's like saying, why don't we go buy? When's a good time to buy GME? It's kind of flagging on the day over here. It's kind of flagging. It's kind of flagging over here. You know, intraday here, it's kind of flagging. So maybe I'll be a buyer. You know, it is sort of flagging in here. It actually is flagging in here. Maybe I'll be a buyer over here. Oh, by the way, what you just saw there was from $400 to $50. I know it's hard to see on the chart, but that's actually this flag that you saw here was actually. So again, trying to use that mentality, you got to do it where the levels actually are. If you miss a move, then you don't FOMO and you move on. The Zoom chart, I would wait for support, or you just need to buy and remove any sort of intraday understanding, and you may be in a position that's down in points. But otherwise, wait for the level. Don't FOMO. Just wait. No hoping. If you're not already in this position, then you're waiting. There is no such thing as buying over here. If you didn't buy from open, then you're waiting. You need to buy from open. So the whole day's in front of you. Otherwise, you wait. Wait for the pullback. Wait for the pullback. Or wait for tomorrow's open, right? Unless there's a significant move that comes in, right? Unless there's a significant move that comes in and you know you have buyers behind you. The problem is that the more you wait, right? This is why we talk about capturing. The more you wait, the price difference here is significant, right? Significant price difference. Which is why a lot of times you just say move on, but since we expect this chart to go so far, you know, you're just waiting for the next consolidation. You don't wait for intraday consolidations, you wait for daily candle consolidations, which has not done so far, right? So you need to wait for the next consolidation, which, like I said, is most likely a trend line pullback. There's a lot of examples of this, right? We buy on consolidation breakouts, and then in terms of our rules, we buy support, sell resistance. Resistance can turn into support, right? So that's where we wait for the break, and then we buy on the support bounce. But otherwise, like, can you buy this LX chart here? Like, you can say the same thing here, right? Like, as it starts to turn here, maybe flattens, maybe you can... No. You missed it, you miss it, right? You can't be a buyer up there. You missed it. Java, you buy from open. Can you be a buyer now? No. You already missed it. Go buy something else that you can capture, right? You're going to miss some charts. you are going to miss some charts. You don't look to then turn something that's already won into your own winner, right? No, those are the people we sell to, the chasers. We sell to them. Move on, right? She's already got a boyfriend. Stop texting her. She's taken, okay? Stop stalking her, okay? That's fucked up, okay? She's got a boyfriend. She said no. Leave her alone. Move on to another one. There's some other woman out there that, is looking for a partner. That's you. But if you're not out there looking for her, you're going to end up with nothing. So move on. Brian says this is getting too real. Exactly. Use some real life experience with your trading. Move on. When you go to buy a new car and you see someone pulling out of the dealership with the car you wanted, and that was the only one they had, you don't go Grand Theft Auto and take their car. No, I wanted that one. And then you don't go, well, I'm not going to buy a car now. Let's say you go out to eat and they're having this real special dinner and you see this nice piece of steak. There's a nice steak there, right? And you're like, ooh, can't wait to get that one. I want that, right? It's like a little buffet fancy dinner thing, right? Where they get the nice chef is cutting up the meat and you're like, can't wait for my turn to go get that. And then you get up there and it's already all gone. You don't throw a fit, go, well, how do I get some? Can I go maybe take some from some? Hey, can I get a piece of that? I know you're eating it, but can I have a piece of that? Move on. Get something else. Something good up there. All right. McKeezus isn't in here. We're still waiting on, maybe in terms of the fund, maybe we should change it up. Maybe we should go into the voting process. I think we should change it into voting now. So again, we started with 1,000 in the fund. McKeezus started us off by buying OCGN at 345. We are, as you can see, got about 222%. We're doing okay, the double up. But I think what we're going to do is remove the reins from him, and we'll go into voting. So I'll start a poll before we go into close, or go into lunch. I'll do a poll, hold the position, sell the position, and then if everyone votes to sell the position, I'll take profit on it, and then I'll start a new poll for what's going to be the next entry, right? Because I don't think we should be sitting in positions forever and have one person just doing it. It should be a vote for everybody. That way, one person doesn't know, but everyone voting together is certainly better. Okay, let's do a little bit of a rundown. Looking across, and then let me show you where the dollar is in relation. Dollar over here, I would say this candle is leading to further upside. I would say, 18th over here. Dollar's most likely up there. In terms of volatility, subdued still, right? Subdued. So no like, oh, we gotta all take profit, get out of here. None of that's going on. Whoops. I actually just typed in ETF. No. In terms of banks, this move continues, so we're certainly full value still. Like if banks doesn't turn, then certainly your other positions that are considered value are not going to stop either, right? These moves continue. Guns. I just want to emphasize, again, you could have bought this today, right? And that's a great trade if you took it on the break. But I just want to mention the difference between buying at this support over here on Friday in the buying and open today is such a significant difference. And this is where you make your true profit by just following the rules here. This move, for those of you that took that opportunity on Friday, which is most likely most of you, because you guys are very quick for me to open up a chart, and I was looking at this Friday, I was like, this $20, I like that. And then you guys are like, oh, let me get in my broker and go buy the calls. I mean, I'm sure that's what happened, but this move is significant, and again, you're going to be able to capture that move. It was bearish. It got rejected. You have to be able to, if you took this move, took profit, you have to be able to rebuy, right? You gotta move on to the next trade. Again, the Chinese tickers continue. Keep those ideas in mind, and also do not get shaken out of those positions. I would say, I think that's going to be important. I'm going to move on to the next topic here, which we talked a lot about last week, is the intermediate idea. So we have the intermediate tech companies, the not too big, not too small tech companies, and then we've got the intermediate idea in value, something like intermediate travel, those sort of service sort of, I guess, maybe the facilitators of travel, not specifically what they are. So they're sort of an intermediary, right? TCOM, EXPE, right? Trip.com, Expedia, these sort of charts. Guess what? We've talked a lot about this, so we took this break here, right? This sort of move here in relation to the travel move that's coming, this led the move, right? And we talked a lot about this, that this move would lead the travel move, which is exactly why we took those charts that naturally we wouldn't be taking, right? We wouldn't, we buy support, but most times when that chart has been bearish and it's been consolidating, we don't take that support buy. We took the support buy because of these charts like this, right? Because of the way that they were leading price, these leading factors. And again, when you look at sort of the airline side, you're still consolidating, right? But we took these trades on Friday because of those charts. So keep some of those ideas in mind. These moves, there's been no doubt, right? We just continue to push these, right? JetBlue was behind. We got all the breakouts, and then this chart started to go back. We didn't then say, oh, this is bearish, we're not going to trade it. As soon as that trend line broke, we were buyers. We've been here. But a lot of this has been led with those intermediaries. Keep those in mind, those charts that are not so much the obvious. They're not so much like, oh yeah, that's a name I know. Sometimes it's those charts that really are really doing the best, and I would say offer you the best chance to capture something, because they're not everyone's hyping them up and thinks about them all the time, right? JDR mentions Penn. What do we do on Friday? Anybody remember what we did on Friday at Open over here? We bought Penn. We bought the retail tickers, right? Thursday as well. Thursday and Friday. We bought these pullbacks. Now, what do we do normally? We would wait for a breakout. Why do we buy over here? Because retail has finally sort of come back. We found them. The PRPL chart, if you guys remember, we took that on Thursday. This sort of move here with this break, understanding this move. Now, what does retail do? They're very sensitive and take profit, so you have to be understanding of that, of course. But even this, you should be able to push this position. But this is a good example of when we get sort of these, again, it's hard to see on the candle. This is of over 5% candle, so this was almost 10%. This is almost 10%. These sort of ideas in here. When we find retail, trading these are good trades, right? We took this from Friday from the trend, this sort of trade to the upside, getting this before they all jump into it, like that Penn chart. The Penn chart, you should just be pushing along anyway, but it's so much about when you buy it and not doing the thing that so many, new traders and everyone wants to do, which is to see, oh, everyone's getting real excited about this ticker. Let's all get in together. No, you got to be doing it before them, right? Because if you're not making this move over here, well, over here, it's really hard to take this trade. It's really hard to take that trade right there. Like I'd say, good luck. because you're paying a significant premium for it, right? Not to say it's bad, but you're certainly paying the price for it. And, this is again where you probably just move on. Now, I do have a $200 target since last year on Penn. We haven't really shaken that. Since the call, we've basically been on schedule. So 200, which was I said by the summer, the start of summer, this would be 200. We're certainly there on the trajectory. I do like that chart. It's a good chart, not even because there was hype around it, but it's technically trading, which tells me there's a lot of the big boys in there. APHA continues. Again, this move, I talked about it from open. You get that trend line, perfect. That's all you need to know. What is it that I'm expecting this to make a big move here during low liquidity, like during lunch, when there's less volume, the spread's going to get wider there. I expect that since there's so much more demand over there, that this just takes off. One of those situations where that less volume and liquidity actually causes the spread to widen and make a big move, right? Since it's so demand oriented, I think it's probably good consensus there. Keep that in mind during this lunch. Maybe even like the way that Brian asked that question about Zoom, not specifically Zoom, even if it may do that, but in terms of the tickers that are a little bit less volume already, sometimes during that lunchtime, that melt up turns into sort of a violent move because that spread is just ridiculous, right? You guys know the tickers I'm talking about, where you're like, even Brian mentioned last night, like what was that ticker? Whatever that ticker was last night that we were talking about with the wide spreads. Those situations, this is when you get that, which is why we don't edit. That's why we don't trade those tickers during lunch. We only trade during the open and close, because once the spread gets too wide, you've got no idea and you can't trade it, right? So you got to make that decision before that starts to happen, right? Can you be buying MJ right now when you're looking at it? Well, you should have already decided to, if you're going to. This is where I talk about you shouldn't right now be figuring out, I wonder what I should be buying. If any of you are asking the question, what should I be buying right now? What should I be doing right now? It's fucking 11:30. What do you mean? You had an extra day. Right? So keep that in mind. But I do expect, from what we've seen so far, you're going to have some, maybe even travel makes a further move during lunch here, because it's so demand oriented that with no supply, that might just, you might get some significant moves one way or the other. And again, what do I talk about during lunch? If there's low volume, it's not accurate, right? If you're not sort of at an average sort of volume level or order flow level, then prices are not accurate, which is exactly the spread idea. If the spreads are wide, that's because prices are not accurate, because there's not enough continuous trading of a certain idea, right? There's just too much there's not enough liquidity, not enough understanding, and so the spreads are going to be wider, and you need accuracy, which is through consistency. Lunch is usually not consistent. That's why we try our best to understand it, but it's usually too difficult to understand. Again, what's the most common? A lunch pullback, right? Which we're starting here, but you already know that since we pulled into lunch that now this might swing just to the upside, right? Still kept broadening. Value still has this trend line to melt up on. Well, what's going to happen here? Well, more than likely you're going to melt on this trend line, right? Just like we did on over here, right? You melt up, you just stick on your trend line. That's why we've We understand the trends. We understand the way in which price is going to trade. Same thing here, right? That it's just a different level of elevation, different timings. LSU says, oof, Tesla. Like I said, most likely, we talked about it over here on the breakdown, right? As soon as when it opened below that resistance, we already knew. And then I drew this over here with the trend line to show that breakdown. This is just following chart patterns, right? Just following the chart pattern. And again, we expected this back over here, that as soon as we weren't able to break through this supply, that you're going to have this consolidation. You don't want to get baited. You do not want to get baited on this. So those of you trading options, I know no one's in this for options. Nobody. Everyone's a buyer down here, though. That's for sure. It's like even Friday, we're not buyers on Friday, right? We weren't putting risk on this trade from Friday, but we know that as this comes into here, everybody wants a piece. You're going to start to get all the limit order. They're probably in there. You can probably go look at the book and see all the big boys down here. 750 sounds good. And again, there's a lot of demand being mixed, right? Ford, why is this up? Well, because this is the new boy. This is the new blood. This is the new blood over here. New EVs, not just Tesla. All right, spread the demand. Where are we going on VRM? Anyone got any predictions? Trying to figure out what this trend line. I'm thinking something like this, right? You've got the trend line in here. Now this lines up a little bit better, and that's pretty consistent. So it's a bit of a zone over here. So you definitely got hit on resistance today. That's what I would say. I would say that this opening, again, that should be about exact on the daily. Should be a bit of a resistance hit there. That's not a transition. Your reversal would still be from this entry, or you already, if you were from over here, then of course you basically already did something. But in terms of if you broke over here somewhere, you'll get stopped out. I wouldn't be doing anything there. Certainly a rejection to start things off today. Let's say on this type of chart, you're looking for the break here. You're looking for that trend line to be broken. Again, you're looking to continue this, right? This would be being underneath. Doesn't need to get into this channel, but it needs to at least break this trend. These charts, when you take into consideration what has happened on these charts, you'd have to, when you start to think about the week, think that price is coming up here. It's really hard in terms of probability to say that this break of supply is not going to lead up to here in a very quick fashion. I find it very hard to believe that this will not trade between these levels almost immediately. Same with, CCL, all the airlines. They're all coming up here very quickly. So again, you got to make your decisions. Just like it traded between these in a gap fashion. The likelihood that your gap chance continues to increase as you get closer and closer to that supply. And again, this is where that retracement point is, right? Even if it's a little bit lower, that retracement point it's going to happen quick. Do you want to make a few 100%, or do you want to, lay around, complain about your positions? Oh man, my position's down today. I'm going to stick with it though. I hate being wrong. hate being wrong. Sit my position. Hey, Don. I'm down 30% on my position. Should I stick with it or should I do something else? They then they look at the other charts like, you know what? I really am not a big fan of that move. I really don't want to get involved with that. That's too scary for me. I don't like that. Gross. That's gross. Nope. Bad chart. Nope. I'm not a big fan, Don. Sorry. I heard the clip over here on November 4th where you said you're going all in. I said, nope. Not calling your bet. I fold. I'm folding. Hey, Don, what can I buy here? Can I buy something up here? What do you think now? What do you think now? Should I buy something here? Well, let me tell you, my friend, you can buy from me from my take profits, okay? I've got my trigger finger all over the take profit button. I warmed it up this morning. Oh, buy me retail. That's what I say. For those of you that have been hitting the take profit button this morning as well on some of your other positions, this is where you start to question adding on to those winning positions as well. That's sort of, when you think about some of these trades, I think when we've been talking about transitioning, right? This is where you talk about like a Z position, right? You were in Z over here, and then you transitioned here. This is where you start to say, okay, let's say you've got a certain sizing, like whatever your strategy is in terms of sizing. Let's say you're like a 5%er, right? You've got a 5% sizing through here. Then you transitioned here and you keep 5% on new contract. This is where you're questioning as you take profit on others that maybe you increase your sizing, right? You're like, okay, let me increase the sizing on these positions that have now sort of transcended the move that they were on and have entered completely new supply, right? Those charts that are very bullish, no real downside risk. You're on a trend. These are the charts that we've already talked about, right? These transition charts that have continued to trend. There's very low downside as you continue the move, which is why you're transitioning in the first place, right? Taking profit on the first move to give yourself more legs. Those kind of charts, this is where you're really getting into that mode of, okay, I'm gonna, as I take profit on other positions, I need to put that cash somewhere. Think about some of these, right? Where, as you get another, maybe let's say you already got a Zoom position, but you're like, all right, this is confirmed to move. I'm a big fan of it. You wait for that pullback to go put that new cash on into a new position here, right? Think about that a little bit here as we continue. I think there's probably you guys know what I'm talking about. There's probably a lot of good examples of this on some other charts that you wanna really start to consider upping. I mean, look at the upwork chart, right? When I took profit here and then I had to rebuy the next day, this is a good situation of, okay, I'm going to increase my sizing because, let's just be honest, right? Let's just be honest. Like, that's what I did on the Chinese tickers, right? I had this idea back over from back last year when we first, we traded them in the summer a bit because China was recovering very quickly, so their value recovered very quick, but it was also all tech-oriented, right? Big SoftBank shit going on, right? But over here, once we started trading this further and the breakouts happened, and I know some of you are, again, every time you see this kind of chart and you're like, what am I trading this dog shit for? And not just trading charts like this. You're 100% right, and you should listen to yourself. Stop trading dog shit. Like, trade the charts that are trading to the upside. But over here, for instance, when I really started to change up the tone in terms of the Chinese tickers because of not only them basically taking over New York Stock Exchange, these require larger sizing. You're going to need more money to start to pay for this. This is not so much now you've gone from a marginal trade into the bigger your sizing, the better. Because, maybe before over here, for every 5% on the underlying you were making, let's say 50% something. That's ridiculous, but I'm just trying to give a point. And now maybe 5% is giving you 20%, right? But if you've got a significantly larger position than before, well, then you're still going to be gaining more cash value-wise. And so you've got to start to increase your position, because otherwise you're making less now. You don't want to be making less here. You're paying a higher risk. You're paying a higher premium to continue to trade this. So you don't want to be making less when you should be making more. And that's where your sizing starts to come in, that, okay, I'm going to need to up my sizing. Technically, that increases your risk, but that's only from the point of view from trading it beforehand, right? It's technically, you're just paying a higher premium, but the return ratio is the same. So your ratio is the same technically, but you're paying a higher price point now. So you have to up your sizing, and that's where sometimes these charts start to. Some of you may not, like those of you, I talked about it in this chat, we've got like more than half the group is on like a very high capital side, and the other half is maybe on a lower capital side. This is where those lower capitals could have traded down here, probably not able to trade it anymore up here, right? The price point's just a little too high to actively trade. And this is a good example where that higher capital side starts to really be able to take advantage of over here, because continuing to trade this on a trend, this is where that higher cash flow you have is allowing you to actually make significantly more points here compared to the market, that idea of alpha. And you're just utilizing, the cash game, understanding that you're trying to get all of your cash in the market all the time, otherwise you're not compounding, and there's no point to even, what's the point of having a larger account if you're not trading more, right? That's like someone saying, oh, I made 100% today, but that was on one trade for $1,000. And let's say you've got $1 million account. Well, you didn't make 100% today. You made, what, 0.1. Well, you made 1%. I'm just joking, but you know what I'm saying, right? So you got to have all your cash working for you. You got to find those positions where you can put that cash, which is, again, when I talked about the big boys this morning, what are they doing? They're looking at tech, and they're saying, well, or like, this is like at close on Friday, right? There's enough liquidity here for them to enter large positions because bigger cap size, right? More liquidity over there. They can get more cash in the market. So instead of making 1% on 10,000, because it might be you can't get any larger of a sizing on a position for a specific ticker, you go put 100,000 into something here because you get filled the same way. And now you can make 1%. You can make 100% on a $100,000 position instead of 100% on a $1,000 position or a 10,000. Right? It's a big difference between those two things, and that's where that you've got to start to ask those questions and figure that out, hopefully beforehand. Right? So now let's say you're sitting on 50% cash. Now you're only making money on half your money. That's not good. Profit on half your money. You got to find ways to get that money working all the time. Otherwise, you're just, you're sitting around not doing anything. It feels like shit. It feels like shit to sit on a ton of unrealized gains and then just to sit on cash, right? There's times when it's important to be able to do those two things, of course, but I would say right now is the most difficult time to figure that question out. That's the $1 million question for most of you. We've done a lot of transitioning and everything, right? How are you going to continue that into the next couple months here? How you get your cash working for you, and when is a good time to be on the sidelines and have your cash not in the market for protection? That was this decision over here to sell, right? We sold everything, 100% cash. We're 100% in the market since that Thursday 2 weeks ago, right? That's the thing I always talk about for this group is to keep, the best thing I can do is keep everyone on the right side of the market, whether that's to be 100% cash in or 100% on the sidelines with 100% of your cash, right? Those are the two big things. And that's where you could just make 1%, 2% a day, but if you're 100% in the market, that's more than someone that's not, right? Make a percent a day, that's pretty damn good. You're going to be, you make a 1% a day? It's a lot of days in the year. Sounds like a lot of percent to me. But that's if you have 100% cash in the market. And that's where I always laugh when people say, oh yeah, I think I can make like 500% this year. And I go, I start to laugh because I'm like, what? What do you mean? You're going to make 500%? You're fucking crazy. Hey man, I think I'm going to go from like 20 grand to like maybe 100 grand this year. Okay. You're pretty good then. That's pretty damn good. Not saying couldn't do it, but let's be honest. That's some roulette odds. For lunch, we're continuing it. We're holding this level down here, tightening a little bit more. In terms of positions, what we were talking about with some spreads, we're certainly we got that right. This is from when I was just talking about this over here. Take a look at the move we've made so far, but a little over 2% on the underlying so far in the last 20 minutes. This is a good example of what I was. So we just got confirmation of that idea, right? Going into lunch here, that you're getting a wider spread. See these candles? Much wider spread on these candles. There's not. This is a good situation where you look at the. Again, I don't usually bring up volume that often, but take a look at the way the volume just changed over here. Because look at over here, you have less than average volume that starts the move. That causes everyone to come in. So that's where this low sort of volume and spread actually causes a move to start to happen, right? And that's where everyone goes, okay, well the move's starting, let me get in there. And so that's where momentum trading comes in. So looking to capture before the momentum comes. Right? You don't want to now be like, okay, well now I'll buy over here. You want to capture this move. Capture it before all the people come in. Are we back in MJ? Oh God. Oh God. Exactly. Exactly. That's actually that question right there is exactly the point of everything that I just talked about. Not shitting on you, Alice, or anything like that. Talking about this move that we made, the transitioning, and then understanding on Friday to get back in here. Understanding that when I ask the question, again, I'm talking rhetorically to myself when I do it because I have everyone muted. Is when I ask the question, what has changed? What has changed when we look at this take profit other than we had a large rally, that we had a hanging man candle that we understood. And first of all, within this candle, you had to take profit. This is the open. You had to take profit immediately from this candle based on what was happening. And then understanding that our transition point to re-enter was over here on Friday because of you didn't continue the move and you actually tightened and stopped, and it's just the usual chart pattern, right? It's just the usual price pattern, not chart pattern, but just of where you just continue, right? This idea is not any different here. It just looks it looks like a significant move comparatively, but it's the same thing. It's quite literally the same thing. It's just obviously a different sizing, right? It's just the same thing. This idea, right? And so you got to be able to certainly take advantage of that, and it's exactly what we did. Think about it. What's the difference between buying here on Friday, right, for this move, and buying this on Friday? What's the difference? There is no difference. There is no difference. I could have just copied and pasted that same thing. There's absolutely no difference. It just feels different. That's all. It looks different. But it is the exact same thing on a price point, on a price basis, right? It's the same thing. And so that's where you got to be able to make those trades there, which is why we talked about so much of these pullbacks happening and understanding that we're actually buyers, right? And this is a better example because we're more oriented this way. This idea here with this trend line and buying on this pullback, understanding that this is not a reversal, this is actually a buy opportunity, right? So again, none of these things are different. So I just want to show you how that none of these are different. It's all the same damn thing, right? It just feels different on an emotional level. But again, pot stocks, this thing, what has changed? When you ask yourself, when you see a take profit happen, all you got to do is ask yourself, what has changed? People were willing to buy in here. Won't those same buyers be willing to buy over here? Isn't the level the exact same? Isn't the level the same? Yes, it is the same. Because it's the same question. If you ask someone, are you willing to buy at $100? And they say yes. And then it goes to $200. And then it comes back to $100. Are those people that were willing to buy at $100 before no longer willing to buy at $100? No, that's why it's called support. The buyers never change. Because you ask them the same question, they're going to answer it the same way no matter what has happened since, right? Unless there was, unless it's maybe a celebrity that did something bad and then now you don't like them anymore. That might be different, but that's emotional too. Keep those ideas in mind. Throwing out a lot of ideas today because again, in terms of positions, we were fully positioned. There's not so much something to talk about on technical side that we haven't. Tomorrow we're probably going to have a lot of things to go over pre-market and everything else intraday. A lot more alerts that you guys love. We're already in position today from last week. I'm going to mention the X move here. This move that started here and then we talked about. Think about this price movement as well. Same thing, right? Is there any difference here? Is that not the same move? Right? We talk about this move and think about it also in terms of levels. What do I talk about? I talk about breaking through a level, pulling back into the support, and bouncing and then continuing. That's the best possible move that you can get. Just breaking through. If there's a ton of velocity, it is okay, but there is a reality here that you did not pull back in and test those buyers and have the buyers come out. Maybe they're momentum buying, and that's where a breakout, we understand the difference between a breakout and price just sort of melting through a level. You can see it and it's obvious. But a lot of times you're looking for this price movement, right? And this is a good example of it. There's a lot of good examples, I would say, coming today. And you've got to allow this to become obvious. You have to let it become obvious. And so, I think for a lot of you, when we started this whole shebang, you had a lot of your own ideas, and you removed a lot of them in terms of price movement, converted over a little bit. It's going to significantly help, right? Let's see, where exactly can we put this trend line? Is it still like here? A couple different ways to draw this in here. I'm just going to average it a little bit. Average it a little. See what we get here. More than likely, again, this trend line is the same as the Russell chart. It's down here, so the move would be the same. Move would be the same, it just looks like it's further. Or you're going to get some sort of broadening like this from an intraday perspective. That would be interesting. It shouldn't exactly happen, but you never really know. This is a lunge pullback. This is where, again, we're not going to treat it the same way as over here, but we're not going to discount what's in front of us, right? So that's our story, but if on the technical side in terms of our rules, if it's obvious and there's clarity that we should be buyers in certain circumstances, again, this is just the average, but if your charts that you want to enter make clear bounces and then start to go, then that's obviously a buying opportunity based on the chart. In terms of the average, we're not trading it the same way. No one here is trading SPY calls right now, I'm pretty sure. So besides those of you that are still bag holding the 400s for the meme, which is there's nothing wrong with that. You're not going to get compensation though. I will not bail you out of those positions just for the meme. Not even to compensate you from the profit I already took, but you'll be fine. Let's bring it over to volatility. When you know that these are correlated to the downside, basically looks like the SPY chart here intraday. But again, it's all movement that matters, not the value. Look at the movement here. Hasn't even moved. The derivative hasn't even budged, right? Derivatives have not even budged. This is a good example. The good example. Are we breaking down? I don't know. You let me know. All right. I'm going to wait for this move to sort of level off, and then we'll take a break for lunch. In terms of today so far, again, it's very much a management day. Very much a management day, sort of swapping back and forth. Really finishing off last week's, or the last 2 weeks of price action, and now we're getting into that. It does feel like a new week situation as we come out of other positions and sort of push new ones that have been confirmed now from last week, right? So if you feel like you haven't done anything, then I would not worry about that so far. That's certainly how the day has started here. A little bit of rotations going on. I wouldn't be feeling too bad here for most situations, that's for sure. This is a trend up, right? You're trending to the upside on a day that technically is even on this chart is making the technical move it technically should be, right? And so even here, I think this is now finally you get a situation where now you can have some decisions be prompted, or some questions prompted for decisions, because again, this is just a trend line melt up. But now over here you at least get a little bit of flavor going on. You might be able to get a pullback situation like this. Well, this is a buy opportunity down here. It's not one here because you're just pushing the same position. But down here it's a buy opportunity. So maybe this gets into a situation. I think tech has already presented itself. We already talked about that. But again, these are all from open, so now there's nothing to do during lunch, right? There was some things you could do leading into lunch, but again, you can't go, well, now what should I do? No, there's certain times when you should be doing something and then not. You don't know what's going on over here, so don't try to act like you do, right? I don't know if it's going to continue to pull back into the trend line or if it's going to just whip back and forth until we see it, right? So we can't react until something's happened. Nothing's happened to make us do a decision other than there are positions that you've obviously taken profit on. There are positions out there that you've taken profit on, 100%. On the average though, no change, trending. In terms of like a move like this is certainly, when you think about this situation, and the more people that jump in here, if you are in a position like this, in terms of bios, these are difficult. These are difficult decisions as well, where you just got to follow your rules, right? You got to follow a rule. You can't guess. You can't say this is the top, that's the top. You need a full reversal on something like this, and then you want to find a home for that bio money, that's for sure. Sava continues, can I buy now? Again, every single time you ask that question, you're watching price and not making decisions, right? That HYLN position, like I said before, if you took this trade over here, as soon as we heard it's a little bit Reddit based, if you didn't, I mean, I'm pretty sure we talked about it. Everyone should have taken profit on this move here based on the way that we saw it. This whole pattern through here, right? Over here, if you somehow became a buyer again, I didn't buy over here, but if you did, then I wouldn't be holding through any movement like this, since it's like all retail now, apparently. Maybe it was retail before, but it wasn't trading on that schedule. Now it certainly is. Yeah, we're not. I'm not screwing around with that over here, unless it's full clarity of, okay, pullback, buy, sell, whatever. Short term it. You bought it open, you take profit, you buy on the next dip, you can day trade it like that. But you're not swingy anymore. TME, I'm really interested to see what happens by the end of the week. Should continue, of course. Just doing a quick run through. Take profits everywhere for lunch, right? So again, this is where I already said you should be making your decisions on transitions and everything already. PRTS should continue this week as well. Pretty consistent across the market, so close should certainly be interesting because you're not going to have everything come back at close, right? So if everything's making a lunch pullback, like most everything is making a lunch pullback, right? Not everything's going to jump back at close, right? So this is where maybe those of you that have taken profit so far from open, now this is where again, you're either adding on to positions or you're making some sort of decision about that cash to keep it on the sideline, right? If there's not a new breakout to take or anything, then other than adding to positions that are already winning, then don't force it, right? And that's, again, right now is certainly a difficult decision. On some of these charts, don't give back the profit. Don't give it back. Just because you have new cash to work with, don't give it back. Keep it. It's pretty straightforward trend, I'd say so far. What is that? Whoa, why is that freaking out so much? Anybody see this candle right now? What the fuck was that? Holy sh! I think that must have been a bug from TradingView trying to process the orders or something, because I don't think that's what the candle actually was. From what I see, that was not like a flurry of orders or anything. That was just normal volume. I'm not sure I don't know if you guys saw that on screen or not. What the heck was that? Looked like there was 1 billion orders coming in at once with different spreads. All right, let's get into lunch. I think from what we see here, the last thing that I'll leave you with, if we were breaking down, then price will break down. This is a little bit too controlled. So in terms of how much we would sell, remember, if you're going to sell, then you're going to sell. You don't. I know I made the garage sale joke a few times, and then some of you were like, "Oh, see, we did, but we didn't." So just to again prove the point, that's not the or okay, whatever. But the point is that if you're going to sell, you sell it all, right? You sell everything. We're not doing that, right? You don't control sell all the way down, right? It sort of happens all at once, and so maybe it will, but it will all happen at once, right? So don't get baited into any of those ideas for those of you in long positions until it happens, right? And that's a good way to get your reversal. If it's happening, then react to it. Otherwise, don't overreact. Let's take a break for lunch, drink some water, get up out of your seat. Thinking to maybe do some sprints during lunch. It's a little warmer today here in the city. The sun's out. It looks kind of nice. It's been snowing and shit, so it's like almost impossible to run in the city, but maybe we'll go to the park. I don't really want to watch price movement because I know I'm going to get shaken on some positions. I'm going to let my my stops do the work for me. I will see you guys at close. Probably come in 3:45 because I do think we're going to have some opportunities come close that we can get the boogeyman emojis out. So I'll see you at close. Enjoy your lunch. Those of you in Europe that may not be back, I will see you tomorrow morning. Have a great night. See you guys in a little bit. Enjoy.